just remember, everyone must certify at 80%. Okay, so if you make 80% or better, you're done. You can't go back. You get 2 chances, but if on your first try you make 80% or better, you can't go back and try and do better. All right, because it realizes you passed. What the test will show you are which ones you missed, which is good. So you can go back and research those or ask us and figure out what happened and what you missed. Because it's important, I like to know what I missed, right? That way you don't make the same mistake, you hope. And same thing with tax returns. We'll give you key numbers in the tax return before we leave next week, so that as you're working through it, you'll know what the target is anyway, and it'll help you. Okay, let's see. So let's talk about, has everybody here's got their packets open? You've already put your 4012s together with the tabs in them. Let's talk about the blue or green folder that we gave you and go through those contents, if you would. You should see, I think it's on the left-hand side, an agenda. So again, we meet, we meet today and tomorrow. It says new volunteer SMU undergrads, and it looks like it left off Brookhaven, but that's what it's supposed to say. I can assure you that's why the office, tended to. Somehow know that slipped off, so don't take offense.
I need one.
Oh, she needs a packet. Do you have any more folders? If not, I give her this one, and I can share with somebody. Here you go.
Yeah, can you share with Rusty?
You need one?
Oh.
Who else needs one? No, he'll give her that one, yeah. Did I give her a
everybody else
packet?
get- You can see that today will be what all we'll be covering, and then day 2, there's the balance. It's a lot of material, but hopefully I feel confident we'll do it. We've done it for several years in running, and the SMU kids all do it, so I know you all can, right? So there we go. Okay, let's see. The other thing is, and then we talked about lunch. We're going to break at 12:30. So the Form 1040, let's just introduce that to you. If you look in your folder, you should see a 1040. Paul, can you put that up first? Yeah. This has all been re-engineered this year. Last year, for those of you all that have prepared tax returns in the past, the 1040 was a total of 2 pages. And this year, they pulled parts of it out and thrown them into 6 schedules, but they all end up rolling back to the postcard 1040 that we were promised by our administration, which is what this is all about. So we're going to continuously refer back to the 1040 as well as the other schedules throughout the 2 days that we are together, because I need to get you familiar with how to read the end product. Because remember, this is the end product of all of your work, interview, input into TaxSlayer. This is what spits out, and this is what we have to explain to our clients once we sit down at the end of our appointment with them, right? But anyway, again, we'll get into each of these areas, but this is the new page 1. Go to the next page, Paul, if you would. Scroll down, maybe?
There it is. That should be,
No, scroll down on that other one, and it should be there. There you go. Yeah. So what you're going to see is this is where the income starts to roll through, your wages, salaries, your W-2. Again, you've got a hard copy there in front of you. It's the 2nd page. Your tax-exempt interest, dividends. We'll talk about all this. Pensions, annuities, Social Security benefits. And then you'll notice it says total income. Add lines 1 through 5. Add any amount from Schedule 1, line 22. So if you go to Schedule 1, which is the next page in your packet, or you'll see it up here. Paul, if you'll give us Schedule 1. Yeah. They pulled all the other incomes out of what used to be on the 1040, and they put them on the top of Schedule 1. So then we go back and we start picking up alimony received, business income, or Schedule C for self-employed individuals, capital gains, Schedule D, farm income, et cetera, et cetera. And then it subtotals here, and then it goes back to the 1040. So if you go back to the 1040, Paul. Yeah, oops. Okay, then we're on line 6. And then we get to the all-important adjusted gross income on row 7, which would be line 6 minus any adjustments. And the adjustments are back on Schedule 1. So if you go back to Schedule 1, Paul, yeah, down here at the bottom, we're going to get into adjustments. Educator expenses, health savings account deduction, deductible part of self-employment tax, et cetera, et cetera. Again, I'm just doing a quick drive-through just to get you to start looking at this thing. But as you can see, there's a lot of jumping back and forth, and I find it unfortunate because it makes it really challenging to help you all follow it. But it is what it is, and we can, we will master it. But same thing. All these adjustments get subtotaled right here, and you go back to 1040, Paul, and it carries it and subtracts it from 6. We don't even see the number, unfortunately, but it solves for 7, because basically income, all the income minus the adjustments give us AGI. And then from that, it'll take our standard deduction. We're going to learn about standard deductions. And then this is a new item, number 9, qualified business income deduction. And we're going to learn about that. It's basically the IRS is giving Schedule C, sole proprietors, self-employed, a break as much of 20% of their net profit. But it's a lesser of test, and we'll see how that works. But that's where that flows through. And then you get your taxable income, and then on that, a tax is calculated. And then we start, and that's the first time we see potentially what somebody might owe in tax, or what they might owe in tax. But then the story continues, because down here we're going to reduce that tax liability by non-refundable and refundable credits, and we'll see that. And again, those are further detailed. If we go to Schedule 3, Paul. We have a list of non-refundable credits, and we'll talk about these. The child and dependent care credit, education credit, very important. We'll get into that. Retirement savings contribution credit, a lot of our clients see that. Residential energy credit, not much anymore, but there's still some of that floating around. Anyway, those get subtotaled, and you go back to the 1040. Paul, if you would go back to the 1040. And that gets picked up. Along with it says add any amounts from Schedule 3, and as well as the child tax credit and credit for other dependents, which has been tweaked, because last year we had a child tax credit, but that's been tweaked. It's not available as generously available as it used to be, and they've changed the amount. Again, we'll discuss that. So potentially you have credits that are going to reduce that tax liability, but then you have to add back other taxes. So if you go to Schedule 4, Paul, here's some of the other taxes that we're going to learn about. Self-employment tax, which is charged to individuals that work for themselves. Unreported Social Security Medicare tax, additional tax on IRAs. You're not supposed to pull money out of your IRA prior to 59.5. If you do, and you don't have a hardship, then you can be penalized a 10% penalty. And that's what that is addressing. And then there's a repayment of first-time homebuyer credit. We'll talk about that. And then there's the whole health care initiative that gets reconciled in the tax return as well. Some of you may or may not be familiar with buying health insurance from the marketplace, or what's affectionately known as Obamacare. So we'll give you a primer on that, and you'll understand how that might impact the tax return. So again, those get subtotaled. You go back to the 1040, and that flows through on line 14. And now all of a sudden you have the total tax liability on line 15. And then that could potentially be reduced again by income tax withheld from a paycheck. If you've ever worked and received a W-2, you know that your pay, that your pay is reduced by the amount of federal income tax withheld, by Social Security, and by Medicare, those 3 items. Well, the federal income tax withheld out of your paycheck is, think of it like a prepayment on your potential tax liability. That flows through here. And we would have input those W-2s, and that's how the system knows what that number is. And then there's those refundable credits that we're going to learn about as well that are actually outlined here. And guess what? Yet another schedule. Let's go see what Schedule 5 is and what might be on that. There's some more refundable credits, including your net premium tax credit that's tied to health care, and then separate and apart are any estimated tax payments that somebody might have made in advance for the coming, for the current year. Okay, and so that gets subtotaled. I know, isn't this crazy? But I just, like I said, it's just the first brush, and we'll get further into it. Okay, then go back to the 1040 call. And now we would know if somebody has a refund or whether they owe. Wah, 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 right? So that is where we get to. And then this last part will be, what I have a refund, you know, I want direct deposit, routing numbers, account numbers, etc. Okay? Big picture, that's what they've done to us. Thank you very much. And this is all in the spirit, like I said, giving us a postcard tax return. They just pulled everything out and threw it into 6 schedules. Yeah. So anyway, again, I just have to, it's painful, but we're going to do this constantly. I'm going to be referring back to the 1040 because I need you to get used to it. I can assure you that once you're out in the field, because I've been doing tax returns all this week with the new form, it gets a lot easier because then you start remembering where things are. Okay? All right, so that is what I will say about that for now. The other form you have in your folder is what we call our 13614C, or Intake, Interview, and Quality Review Sheet. It has a blue band on the top. You see that? Yeah. Thank you. It's a 4-pager, and this is a key document. In fact, the IRS shops our offices. Well, because remember, this program is nationwide. And they go out and send out shoppers to make sure that we're all doing our job like we're supposed to be doing. One of the key things they look for is that our tax preparers are using, number one, that the client is completing this form, and secondly, that we are using it as tax preparers. And that means you read it front to back when the first thing you do when the client sits down, besides checking IDs and Social Security cards, etc., is look at this intake sheet, because it provides you the map that you will follow when preparing the tax return. And hopefully will give you the key information you need so that you prepare this tax return accurately and as efficiently as possible. And what the IRS has shown through these shopping experiences, that if this document is used and you get a review, which everybody has to have a review, accuracy rate is like 98%. So as painful, again, as sometimes boring as it is to look at this, you know, I can't stress to you how important it is to look at it and familiarize yourself with it. And that's why, if you haven't, you need to take that test in on intake and review quality program that's available to you as well after ethics. Anyway, that being said, what does this have on it? Well, it says you will need tax information such as your forms, W-2, 1099, 1098, 1095. Those are all source documents that we're going to be using, right? Compiling basic information so that we can input into our software. They have to show up with their Social Security cards or I-10 letters for all persons. I-10s are a separate type of ID that our taxpayers or their dependents will have. They have to have a picture ID, such as a valid driver's license for you and your spouse, or a passport. Again, there's an intake person at each of the office, and they will be screening people when they first arrive to make sure they have all of this information. But you will, so if they don't, hopefully we catch them there at the front door and send them back home or do what we need to in order for them to have this information. It's also when they check in that they'll get this intake sheet, and then we'll ask them to go sit in the lobby, fill in this intake sheet, and then once they're done, they return that to our intake specialist, and he or she checks that. Yes, ma'am?
Do they have to come as a couple? You can't just do one or the other? They both have to come?
If they want to have their tax return e-filed, they both have to be there to review it and sign it. However, we can do a paper return where we send it, if only one of the couple is there, so we can prepare it, send it home with them, and they sign and mail it. It just takes longer to get your refund. So we encourage them to come together and be there. But yes, it is either option. And then we ask them to please complete pages 1 through 3 of this form. You're responsible for the information on your return. Please provide complete and accurate information, et cetera, et cetera. We provide the form both in English and Spanish because we have a lot of Spanish-speaking clients. And we have a lot of translator, volunteer and staff-wise, otherwise that are on site to always help you too with translation because you'll get some clients that don't speak English, but not to worry. We'll be there to help you with that. So part 1, personal information. They're filling in, first name, last name, telephone numbers, very important. Everything's got a purpose. Telephone numbers are important because if I've got to reach them after they've left because there's an issue, maybe their return gets rejected or we've got to talk to them about something, I need to be able to find them. Mailing address, their apartment, blah, blah, blah. Your date of birth for the taxpayer, your job title, spouses, etc. And then last, were you full-time student, totally permanently disabled, legally blind? All this important because it impacts our standard deductions. It could impact credit, how much credit they get. So like I say, everything here has a purpose. So we want to make sure it's completed. Number 10, can anyone claim you or your spouse as a dependent? 11, have you, your spouse, or dependent been the victim of tax-related identity theft or been issued an identity protection PIN? And then part 2, marital status, household information. This is going to help us figure out, what tax status we would include them as, and we'll learn about those different levels. But they'll answer never married, married, divorced, legally separated, widowed. And then list the names of everyone who lived with you last year other than your spouse or anyone you supported but not lived with you last year. And we're going to be combing this information to see who we might be able to, who might qualify as a dependent. And again, that's going to be driving their credits and some of their other numbers. And they will be asked to fill out all columns. And when they sit down with you, if something's incomplete, that's the first thing you do is let's get these columns filled in to make your job easier, make sure you have accurate information. Then we go into page 2, part 3. Now we've done the biographical stuff. Now we get into actual, okay, what income did you have? We're looking for either a yes or a no. If there's an unsure in any box, and that's totally fair game if they don't understand the question, that's fine. But then you need to talk to them and get it to a yes or no. So we need, that will be your responsibility. So wages or salaries, that's the biggest source of income that we're dealing with amongst our clients. And they'll bring in their W-2s. The biggest problem with a W-2 that I have seen is that it's the wrong year. And you just need to make sure that it's for 2018 and not a prior year. And people get confused with it. They just don't know these forms. But we just need to, and that's true of any form they give you. You just need to make sure it's for the year that you're working. Because we will do prior year returns as well, but that would be a separate stack. And they think you can put 16, 17, and 18 all together in one return, but you can't. You got to do a return for each year, right? So just to be cognizant of that. But anyway, wages and salary comes with Form W-2. You've got tip income, scholarships. Anybody here familiar with the 1098-T? You ever seen the 1098-T? Raise your hand if you have. Yeah. Who provided that to you, the 1098-T? Yeah, your college. It comes from the college, and it comes to the student, whoever's enrolled in the college. And that is a basis for potential credit, one of the education credits, and we have to have that. So that's why we point out what the source document is. Interest, dividends, we see some of that. Refund of state, local income taxes, not really, because Texas doesn't charge state taxes. We just pay federal taxes, but not state. Alimony, income, yep. But you notice child support isn't on here because child support is not taxable. Alimony is, but child support is not. And most of what we see in Texas is child support. Self-employment income, we'll spend a lot of time on self-employment income, recognizing what the sources are, what ordinary and necessary expenses are, how you take mileage deduction, and how you get to that profit as well. But yeah, we ask them if that, and we do. We have a lot of people that do things like gardening, housekeeping, Uber drivers, a lot of Uber and Lyft drivers. And those are all typically people that work for themselves, sole proprietors, self-employed. Cash check payments for any work performed, not reported on W-2 or 1099. I laugh because typically they won't tell you about that, and that only comes up in conversation, and you're asking them about what they might do. Anything else? Maybe moonlight. You know, you're a plumber, W-2 with a company, but on the weekends, do you ever do any jobs for odd jobs for other people? I'm surprised. They go, yeah, and you go, okay, well then that has to be reported. Did you win any, lottery? Did you win the church bazaar raffle and you got $1,000 or something? That's all reportable. Everything's reportable in that regard. And people don't know that. And so, again, it's up to us to at least ask the question and see what they tell us. Income or loss from stocks and bonds. Sales of stocks, bonds. And it says 1099B, but that should also say, yeah, I guess it's the B. I'm sorry. Yeah, that's fine. Disability income, retirement. We see a lot of retirement income, and from pensions, annuities, IRAs. We've got older clients, and then we also see Social Security. We'll see a lot of Social Security, and we'll talk about that. And some unemployment compensation, not as much as we used to because the labor market is so tight, thank goodness, here in the Dallas area. So we'll see a lot of that. Okay, and then other income, which can be everything from jury duty to lottery to gambling, winnings, et cetera, et cetera. Then part 4, and again, they would hit yes or no. The yeses are, then we remember, okay, so we need to drill down and make sure we have our source documents and make sure and get those into tax layer as well, right? Part 4, expenses. Last year, did you or your spouse pay any alimony? Contributions to a retirement account. There's a college or post-secondary educational expenses for yourself. So as we'll learn, not only, in some cases, one of the credits will not only take expenses from the 1098T, but it could also include out-of-pocket expenses for qualified expenses like books, maybe a laptop if you have to have that. And we'll discern what is eligible and what isn't. But that's why we also ask for other post-secondary educational expenses. Deductions, medical, dental, mortgage interest, blah, blah, blah. What we're going to learn is that the standard deduction, there's an alternative to that. There's what's called the itemized deduction that you may have heard of. And you take the greater of the two. But part of the new tax law doubled the standard deduction pretty much for all the different classifications. So it's really going to be hard, especially for our clientele, to make sense of using the itemized. So this stuff really falls off because we just go with the automatic standard deduction. But we still need to be cognizant of it and understand what the options are and what that entails. Then there's child or dependent care expenses such as daycare. Up to the age of 14, you can get a credit, non-refundable credit for eligible expenses for daycare, after-school care, pre-K, and we'll get into that. Supplies used as an eligible educator. That's a big one for us. It's an adjustment, but you can, what teacher doesn't spend $250 when they walk in the door the first day, right? They've already spent it getting ready, so that's something we can make sure they get the benefit of. Expenses related to self-employment, and then part 5, life events, health savings account, credit card, mortgage debt counseling, adopt a child, have earned income credit, child tax credit, or American Opportunity Credit disallowed in prior year, purchase of energy efficient home items. Again, these are all going to be tying back to some of those non-refundable credits, refundable credits, or even adjustments in taxes. Receive the first-time home buyer's credit, We'll explain all that, make sure you understand what that is. Have estimated tax payments or apply last year's refund to this year's tax. So people that work for themselves are supposed to make estimated tax payment. Whereas a W-2 has that money taken out every paycheck for federal income tax withheld. You work for yourself, it's on you to do that. Because there's nobody telling you, nobody, taking that money out of those checks that you get or cash that you receive for the lawns that you mowed or whatever it might be. So you're supposed to send the IRS money throughout the year. And it's a good practice because then you're not hit with such a large bill at the end when you have to reckon with them. But nevertheless, that's something they would have to tell us, and that's why we asked that question. There's a capital loss carryover, which frankly I've never seen with any of our clients. And to receive a letter from the IRS, and I smile at that because I can't tell you how many people have walked in with letters from the IRS and who wants to receive a letter from the IRS? It's not one I look forward to. And often they'll bring them to us unopened because they're like, I don't know what it says. And typically it's just a clarification and we just need some, they may need some more information or something like that. But we welcome that. And whatever the letter said, we're there to try and help them figure out the appropriate response. And it typically has to do with, obviously, a prior return or something like that. But we ask them about that. We do get into their business some, but you have to make sure that there's nothing out there that, might impact the ability for them to collect their current refund. Like if they owe money to the IRS or there's some, problem with the IRS. We need to know that, and maybe we can help advance that as well as do their current return. Part 6, healthcare coverage. So regardless of who you buy your health insurance from, you have to have health insurance or you get penalized. And that was true from 2014 through 2018. This year, no more penalty. So if you don't have it, you don't have it, on you. But nevertheless, we're doing 18, so we still have to make sure we can answer, that they answer all these questions. I presume next year all this will go away because we don't have to, Well, not totally true, because if you're getting a subsidy through Affordable Care Act and buying your health insurance through Obamacare, you still have to reconcile the amount of subsidy you got. But we'll talk about that. Anyway, this starts to address the health insurance question, and is important because there's a whole nother module and tax layer that you will have to input into and address these questions for the taxpayer, spouse, and all their dependents, the household. And the questions run: have health care coverage, receive one or more of these forms, those are evidence of their health insurance, we'll get into that. Have coverage through the marketplace, that's what I call Obamacare affectionately, where if yes, were advanced credit payments made to help you pay your health care premiums, and if yes, is everyone listed under 1095A? Or 4, do you have an exemption granted by the marketplace? There's a lot of stuff in this intake form, I realize that, but it's intended, again, for you to read, to look at, and master over time. And a lot of times things won't apply. Like we said, there's a yes, no, and all the no's you could just skip through, and we'll just go to the yes and to the affirmative things that we need to deal with. All right, and then we actually ask them to circle the months which they have had health insurance, and we help them with that. And then part 7, we've got some additional information and questions related to the preparation of your tax return, including, do you want to contribute to the presidential election campaign? Do you want to contribute to the wall? Ha, just kidding. Some of them are listening. And
Woke them up.
yeah, right. If you are due a refund, would you like direct deposit, purchase U.S. savings bond, or split your refund between different accounts? And if you have a balance, would you like to make the payment directly from your bank account? Those are all things we'll incorporate into the end result. Let's see what else we got here. I think that's about it on this page. Yeah, there's some other, because as I said, we're a nonprofit. And so we raise money from corporate America and from other institutions to pay for our overhead, right? Salaries and printing materials, et cetera, et cetera. And they often ask us questions about our client base, and that's why we collect this information so that we can aggregate, put those statistics together for our funders, because they want to know, in toto, what's happening and who we're dealing with, and that helps us get the money we need to provide this free service. So that's why you'll see these kind of questions. And some of these are actually driven by the IRS as well. Yes, ma'am.
Do you fill out an installment agreement if they can't pay?
You know, typically, we can, but typically what the preference is and what they choose to do is we e-file their return. We're talking about a scenario where somebody owes money. And one of the options is if they can't pay it in total by the due date, April 15th, they can do an installment agreement, a payment plan, basically, with the IRS, right? And there's a set one that we can set up for them. But typically what people opt to do is we e-file the return, then they wait for the IRS to receive a letter from the IRS that says, hey, we got your return, you owe us money, and if you want to talk terms, call us. And that's what people typically do. Would you say that's true?
Right, that's correct. Yeah, we have the option to do it. They can do credit card, but it's a third party, and there'll be a fee to that when they go through IRS for the credit card payment. But usually, Bill, he's actually right. They just want to get the notice, and they'll try and pay it by the due date of the return. We
Yeah.
always stress to them is no interest accruing until April 15th at midnight. So try and pay what you can until then when they come in and file order.
Yeah, and those installment plans cost, you know, a couple $100, and also we try and encourage them to pay as much as possible when possible. But yeah, that's typically how that works. Okay, so that's it then, and then the last page they should sign is our consent to disclose tax return information. You'll see it on the back of your 13614C. And what that does is basically, and we put it in the system, it gives us permission that whatever vitae site they go, whether it's one of our 7 or one elsewhere in the country, we can pull their information out of the database from one year to the next. And it just makes the process faster. I did somebody had 8 dependents last night, and you know, they came in at what, 7:15, and you have to input all of this, right? And so it's going to be great next year when they come back, and I feel sure they will, because all that stuff will just auto-populate, and it's there. And this consent is what gives us permission to be able to do that.
We couldn't pull the return the other night at their site, right? We had to, it uploaded the information, but we could remember Willie was trying to pull the 17 and couldn't actually get the actual return.
I'm not sure what was happening.
Okay, side note.
Yeah, yeah. Okay, so that's the 13614 vitae. Okay, the other document you have is the vitae training links and passwords. This we don't have an overhead. This form, everybody see this single sheet? Okay, it's supposed to be, we intend it to be your, obviously it says training links. First one, IRS website, www.irs.gov. I can't tell you how important that one is and how it comes up and how you'll use that. So make sure you have that. Especially right now, don't call the IRS. Nobody's there, right? I mean, it's going to be a while before they're up and running.
Monday.
Yeah, but still, they've got a backlog, I bet. Foundation Communities Wife. Oh no, don't pay attention to that. Number 2, ethics. You can see that YouTube ethics. Vitae Central, the link and learn. This is where you're going to go in to take. You should already be in Link and Learn. If you've taken your ethics, you've already visited that site, right? Has everybody done that? We talked about that earlier. So fill in your username and password. We encourage you to write it down on this piece of paper for that, because you're going to have to create. We'll do that later this morning. Username and password in Practice Lab, where you're going to be creating these 3 tax returns we talked about. So just make sure you remember all these username and passwords, because it makes your life a lot easier. Anyway, in Link and Learn, you'll see the advanced test certifications, the volunteer standard of conducts, ethics, Practice Lab, like I said, and the intake, interview, quality review, consent. So all of that's there. In Practice Lab, which is within the Link and Learn certification, we'll get into the use of that password and the creation of your own username and password later. The other site available to you that you should already be familiar with is Better Impact, right? Everybody had to go to Better Impact to sign in to come here. Is anyone not familiar with Better Impact? Okay. So Better Impact is also where you'll go to sign up to volunteer. So And Better Impact is also where you go when you arrive at a site to clock in, because you need to clock in your hours so we can keep track of that for you. Okay? So we don't do any of that on paper anymore. It's all done through Better Impact. So just make sure you have that password, username and password. Be sure to create your account, sign in, scroll down. Yeah, to view available volunteer slots at the site of choice and register for the desired shift, you'll receive an email confirmation. And the magic behind all that is Amber, who's sitting right over here. She makes all of that happen and coordinates that. Our contact information for our headquarters, because these 7 sites that we're working out of are temporary. They're just open during tax season. And we are there at the kindness of strangers is what I like to say, because they're churches or Catholic Charities is a nonprofit. They have extra office space that they have lent us, and we use that. But we're just there during the tax season typically. But headquarters for us is close to downtown over by Baylor Hospital. And then there's also number 7, the Dallas CTC Volunteer Resource. That's our website proper. And you can find a lot of helpful links there. We have a Facebook page. We ask you to share that with others. And then YouTube. Okay? Let's see, what else was there? Yeah, the other reference materials are your Pub 4991, which is a training guide. This is your primary tax law publication. You don't have a hard copy of that one. That one is available online only. Or do you have a one? Wait, maybe you do. I'm seeing the 4991.
Yeah.
Oh yeah, you do have that. I'm sorry, they did get those. Yeah, so you have this training guide and it's hard copies. Cool. Good for you guys. Not everybody got a hard copy. They came in late. And it has by subject matter. Did everybody get this? Yeah, 4991. I just borrowed yours. It has. You can see the table of contents, and it has by subject matter, you know, the different items that will be key to you. So there's one reference point, and then the other one is our 4012, which we handed out to you. Again, for those that y'all came in late, you should run the tabs through at some point that are in the back, because it'll make it easier to flip, you know, to the sections. Those sections match what you'll see in the 4491 in terms of topics, because it says who must file, dependents, income, adjustments, etc. But these are just, this includes also directions on how to input information into TaxSlayer as well as tax law. Covers both. I find it to be the more helpful of the two. But
And bring it to your sites with you, all locations. So that is your go-to when you get stuck on something, because we pretty much have all the tabs memorized. We'll tell you to go to H whatever tab, page 23. So bring that with you, please. Thank you.
no, that's a good point. And like I was saying earlier, for those of y'all that missed it, I encourage you to, the 4012 especially, put it in a 3-ring notebook binder, because it's easier to travel with it that way. And that little ring they give us, they used to give us 3, but that's the cutback. They give us one little ring, and that's just tough to work with. Yeah, for our online training, we're going to be using the online versions of the 4012, as you can see. So it'll be up here on the screen, and then you can tab a page as you need to follow along. The other big resource you'll have at your location is what's called the Pub 17. And that is the big question and answer. Do we have space? Tax guide specific to the 1040, the individual tax return. And it has all the questions and answers about that. And we'll have those on site. To be honest with you, now with everything online, either on site, realistically, you're talking to me, you're talking to your site manager, you're talking to some of our returning tax preparers, and of course, absolutely go online and look something up. But you'll have so many, different resources. All of these that we're giving you are especially going to be helpful as you take your exam and you're on your own, and you're trying to find something on your own. And They say that the tax return is designed that a third grader can do it. And I'm like, wow, that's some heck of a third grader that can walk through and put this together. But that was what I read at some point.
That'd be me.
All right. So again, no need to memorize a lot of the information. Everything we do is open book. Open book, open people, open how many heads do you need to get this answer, but let's get it right more than anything else. Sadly, well, to be honest with you, after tax season's over, my brain just does a dump until the following year, and then I ramp up again, because this is important stuff to know, but, it's not what you want to dream about. You've got plenty of other. There's always, I agree. Okay, so what a typical site resembles. Any questions? Guys okay? All right, I'm going to keep going. Typical site. As I said earlier, the first face that our clients will see is our greeter or intake specialist. They're typically bilingual, and they will provide the individuals with the intake sheet, the 13614C, and we'll ask them if they have their appropriate IDs, and social security cards or I-10s, what they need done. Is it the current year? Is it prior year? Is it amendment? You can do amendments as well. What else am I missing? Because Rocio does this.
We need to ask about status, for example, if they are single, married, it is important for them.
Up front, even before they filled out the intake sheet.
Yeah.
You still want to know. Yeah, because, for instance, out of scope for us is the IRS does not allow us to do married filing separately, which is one of the filing statuses you can do. If somebody's married, at the end of the year they're married. They have two choices. They can file married filing jointly, or they can do married filing separately. And for their own reasons, they may want to do married filing separate between they and their spouse. But the IRS does not, that's out of scope, and we cannot do married filing separately. So that's why Rocio brings that up in particular, because we want to stop them there and go, you know what, we'd love to help you, but we can't. If that's your choice, then you're going to have to go to a paid preparer or some other outfit to do the married filing separate. And the whole thing behind the married filing separate, you end up having to split credits and withholdings, and we're just not going to they don't want us to go down that path, and you got to know your spouse's social security number, and sometimes the spouse doesn't even know that, because maybe there's some behind the scenes what we don't know about. There's some argument going on, or some dissension between them, and so anyway, we should hopefully catch that up front, and that's why that question. Anything else?
About the health insurance, maybe, especially for the marketplace.
Yeah.
So they need to bring that NIFIA.
Yeah. So if they bought, Rocio and her counterparts will often ask them too, about their health insurance. Go ahead and do a little mini interview while they're standing there. Did you buy it from Obama through the marketplace? Yes. Well, you need to have, as we'll learn, 1095A. Do you have that document? Because if not, I can't complete, the tax return. And if they don't, then we can put them on the phone. We have blank 1095As. They can call the marketplace, which is open 24/7, and write in the information for us. But that way we keep things moving. Anything else? Okay. Yeah, so our intake, obviously, they're certifying to the advanced level too. And Rocio will often be doing tax returns if it's a really busy day, and we need her. She'll put on a different hat and come help us do tax returns and do scans and whatever we do. We do a drop-off service as well. That's something else we talk to our clients at the front. We can take your information, scan it, put it on the cloud, and then somebody off-site will prepare it. And then within 3 days, we'll call you, and you make an appointment to come back and pick up your tax return and review it. And so it's pretty cool. We call that drop-off. That's what it is. How original is that? It's our drop-off service, and we offer that at most of our sites now, right? 3 or 4 of our sites. Yeah. So that's a cool thing, especially at a long line. A lot of people don't want to do it; they're scared to leave information. But most people, when they understand the benefit that they don't, because we're first in, first out, and so there could be a couple hours wait, and we're just really busy. So we really push it when we have that kind of line and give that kind of wait time. and give people the opportunity to do drop-off. Anyway, so we'll identify that, our intake person would identify that as well. We also, the intake person will also ask about aggregate income, because our mission is to serve those that make $58,000 and less, right? That's the max income. Sometimes we'll do more than that if it's an easy return, but that is what the mission is, that is what we tell our funders, that is what the IRS allows us to do, up to $58,000 in income, okay? So again, we'll catch all that up front.
And that's for our target goal for the grants that we receive from IRS and from the city of Dallas. We want to target a certain level of low-income folks, so that's why we have the max. But as site manager, we can't approve something higher than that. If it's a simple return, like you said, W-2, we'll get some people in 80, 90, 100 grand. As long as W-2, simple stuff, we'll do it. Also, don't be alarmed. The intake specialists, like we see, they'll screen everything they can. And sometimes when you're doing the return, taxpayer will pull out something out of their bag of tricks and go, what about this? So don't freak out, it's okay, flag one of us down if it's something you don't understand, but they'll do that. Even when I'm doing the review, at the end, they'll go, what about this? And I'm like, sometimes it puts it over the requirements of what we're doing, so you have to send it away.
Oh yeah, it's just a small W-2, you know, $10,000. You're like, oh.
How about this kid?
Thank you so much for bringing that up. Yeah. So
don't be alarmed. It happens. It happens.
It's funny. Yeah. So the other player, of course, is you, the tax preparer, and as we mentioned, you're a customer service. You're the face of the tax return. You are to them the IRS. You're everybody, right? And it's your fault that they owe money. And, you know, it's all on you. They don't know typically what all's behind this, right? But so I say that only because we are customer service oriented and we deflect all that, you know. And clearly your site managers are there. If you ever feel uncomfortable with a client, ever had any inkling that something isn't right or you're just not comfortable with this person, you call a site manager over immediately, go walk over there and talk to them. And if you don't want to do the return, we'll get somebody else to do the return. You should never feel put upon. And people come, when it comes to their money and taxes, people come with a lot of baggage on them that you don't even know about. And you might touch on something not even realizing that. I had a woman burst into tears in front of me. And I thought she was upset, but she was relieved because I finally, unbeknownst to me, one of her daughters was with her, and they finally understood that the reason Mama was taking the daughter as a dependent wasn't to penalize the daughter. It was for the family. The total refund was going to be, you know, bigger than had the daughter filed on her own, and she couldn't file on her own. But she just saw it as, I've worked, so why do I have to be claimed as a dependent by my mom and lose part of my tax? You know, and they evidently had this conversation all before because of an older sister situation. And then when I explained to the daughter how this was the best treatment for the entire family, she got it, and she was okay with that. And so she left, and her mother just burst out in tears. I'm like, oh no, what have I done? You know? And she just said, thank you. I can't tell you, we have been fighting over this for the last 6 months. And so much energy has gone into this that now we can be at peace, and my daughter understands that this is all for the better for everybody. This is a single mom trying to raise her 2 daughters, and the last thing she needs is that flack. My point is, you just never know what's gonna, you know, come at you. But maintain calm at all times. We're just there to do the tax return, right, and help and be a listening ear. And it's kind of cool. That's what I like about this job too, because you never know how you can help somebody with facts, because I hear so many different things on the street that they bring to the table with you, and you can help clarify things. And that in and of itself, you know, is worth $1 million, I think. Anyway, so you are the tax preparer. You'll introduce yourself in a friendly, professional manner. You'll review the IDs, make sure parties you're dealing with are who they say they are, and you'll look at the 13614C, you'll map out your path, and then you'll get on to TaxSlayer. By the way, when you come for the first time to volunteer with us, you never start doing a tax return by yourself. We'll sit you with a veteran volunteer or one of the staff, and you'll sit side by side and watch the first couple of tax returns, and then we'll let you start doing your tax return, knowing that you're always going to be reviewed. All your work is going to be reviewed, and along the path, you ask any question that you need of any staff member there. Okay? So, yeah, then you're talking to the taxpayer, like I said, and a lot of them have been there already, and they know the drill, and it's actually quite fun to see them come back and work with them. The other player, like we've addressed, is the quality reviewer. That's a seasoned tax preparer who will look over your work. The minute you sit down with a client, what do you think their primary question is? Anybody? How much do I get back? Or, you know, they don't want to know about owing, but they want to know how much the refund is. And the temptation, because they're sitting across the table from you, they can't see your screen, right? And the temptation is you want to turn it around and show them, you know, what you're planning to work. Don't ever do that, because the worst thing that can happen is, or tell them verbally, don't even give them an estimate, because they'll ask you, how much is my refund? I'll tell you when I know. Because what could happen is that you tell them a number, and then you get your work reviewed, and for some reason you missed something, the refund went down. And now you've got to explain why it went down, on top of trying to explain to them what the refund is. And you're losing confidence with your client that way. So just tell them, as soon as I get my work reviewed, then my reviewer and I will go over this tax return, and we will explain it in detail to you. And that's where that is left off. But yeah, so many times people have jumped the gun on me, and you know, we've got to change the number, and the taxpayer's just like, you guys don't know what you're doing. You know, how can this happen? So anyway, enough said. Just be careful of that. Quality review. It's so important. The other person on site is our site manager, and we manage the office and handle administrative issues, copiers down, you know, we need more forms, whatever it might be, staffing, volunteers, whatever. You'll be introduced to your site manager and get to know them. And they also handle more difficult returns. I mentioned we do amendments to prior year returns. We can go back 3 years if they or do a refund, and maybe get them some more money. You know, so many times when we're looking, because that's a source document in and of itself, a prior year return. I love when somebody walks in with those, because then I can look and see what happened last year, and if there's any big variances anywhere, or dependent dropped off, or there are more W-2s, there's more income. I'm like, last year you had this. Did you have any of that this year, or what happened to, you know, that caused this change? So we can talk about that. So that's really helpful. But anyway, so we could do amendment. And what my point was that I have found, and I'm sure Paul has as well, mistakes in prior year returns. Whether one of my offices prepared it or not, and a lot of people come from, you know, other offices where, by the way, they had to pay up to $400 to do a simple return, and here we're doing it for free, and they're thrilled. But we've found mistakes, and we can correct those mistakes. We can recreate their tax return, even though we didn't do it originally, and prepare an amendment to correct that mistake, and often get them some more refund. So they love that too. Who doesn't, right? And then the site manager will e-file, handle the traffic of e-filing all of our returns. After we've done with them, reviewed them, and approved them, then there's the whole process of getting them e-filed, sent to the IRS. If there's any rejects or anything, we have to resolve those. They come back to us directly. That's why that telephone number is important, in case we need to call the taxpayer. Maybe a Social Security number is off, you know, or W-2 doesn't match, or something came up. Because now the IRS is using all these computers for these more simple returns especially, and they're matching documents. That's what should be keeping everybody honest. Because if you don't report a W-2, your employer sent that W-2 to the IRS, and when your tax return hits the IRS computers, if that W-2 doesn't show up, then they're going to come looking for that. And so that's why we stress on people to give us all their information and make sure that we have everything. Because there is a check, right? Yeah, and even in this furlough days, from what I've read, a lot of the work for our level of client is done by these computers have all these algorithms, you can do all these checks and balances and quickly turn the refunds around. Okay, so site locations. Can you get to our site and get the map up of our locations? And the site would be, it's on that page. Let's see, what's our site? Dallas, Texas. Oh, here it is, right here. It's DallasTaxCenters.org. And see if we can see. So yeah, this year we have 8 sites, and there are hours, and you can not only see that in Better Impact, but then on this map that we're about to get you can go to our website, DallasTaxCenters.org, and someplace there ought to be, maybe if you put, oh yeah, there it is. Look at there. There's our sites. Let's just back up to the map.
Okay.
Yeah, just to give you a sense of how widespread we are. So we're in South Dallas, Oak Cliff. Here's my site. Paul's site is, where are you, Paul?
Not even on there yet.
Oh, not even on there yet. Okay. Well, see, you didn't want to go to that one anyway. No, but anyway, hopefully there's something that's close by. There's obviously this one's closest to Brookhaven. But a lot of variety. You can find the map and the hours on our website, and that corresponds directly with Better Impact. Okay? You are welcome to come to as many different sites as you want as well. You don't have to go just to one either. And I encourage you, I know, especially for those of y'all that are in school, you probably have a certain number of hours that you're committed to do. You get it done and then we never see you again. But I encourage you to come back, because I will tell you this, that at the beginning of the season, it's all the people that have refunds coming. Of course, they want their money quick, right? So it's that kind of return. It's the W-2s, it's retirement, social, whatever. At the end of the season, it's the more difficult returns. It's our more involved returns, because it's a Schedule C, self-employed. They owe, and they're just waiting for the very last minute. But those are fun, because you really learn about the tax law and all that.
So I was one that pulled things out last night. What about this? Trying to get the bell due down to the refund.
So again, even though you may already hit your commitment in hours, we'd love to see you. Anytime you can come, please come to any of the sites. All right, so I am now in Pub 4012, and I'm in page B1, Bravo 1. And you can look at it online, on the screen up here or in your own book. But I just wanted to show you a neat little job aid here for the Form 1040. You'll notice that they have the tab references here on the right-hand side for each of the sections. So that's, so like if you're trying to figure out income, you can go to tab D, right? And get the background information that you need. Likewise, if you're trying to do some work on standard deductions, qualified business income, taxable income, you can go to tab F. Okay, you see that reference there on B, what is it? What did I say? What is it? B1. B1. Anyway, just keep that in mind. All right, so what we're going to talk about now is, again, the first question we have to answer is who must file. So for most people who must file, there are income thresholds. And what you're going to learn is that this threshold is actually tied to the standard deduction. Because if they don't make more than the standard deduction, then there is no taxable income. Because, as we'll learn, the standard deduction is an offset to taxable, one of the first offsets to the taxable income. That being said, if your filing status is single, and at the end of 2018 you were under 65, then you file a return if your gross income was at least $12,000. And if you're 65 or older, it's $13,600. Married filing jointly, the standard deduction, again, this is what this is tied to, is $24,000. If you're 65 or older, one spouse, then $25,300 is the threshold, etc. Yes, ma'am.
For the single, if So if they make under 12,000, they don't have to file at all, like nothing?
Typically, and there's gonna be exceptions, and we're gonna cover that. But yeah, typically they do not. Because, as I say, the value of the standard deduction would wipe out that income, and there's nothing to report tax on. That's why.
So like if they didn't report taxes for like 5 years and then magically pop off of the radar, there's nothing that happens?
So if they are due a refund, then shame on them, because they should have filed a tax return to get the refund. The IRS isn't gonna come after you if you were due a refund and didn't claim it. If they owed money, by virtue of all the information that the IRS has gotten from different sources, the IRS would be coming after them and telling them they should
I
have
think
filed.
it's so weird to like not file like every year.
Yeah, and you know what? That's why we're here, because some people don't realize there are refundable tax credits that even if you don't have a liability, you can get money in your pocket. And that's why especially with our group, that's important for them to understand. Yes, ma'am?
What if they're self-employed though? They still have to.
What was the question?
What if they're self-employed? They should have filed, and while they want to file, although they may not have, because some self-employed don't have any documentation other than a ledger, a handwritten ledger that they keep themselves. They're paid in cash or checks, and nobody's reporting, that income that they paid to them. And so the IRS may not know, but the reason that somebody wants to file while they're self-employed is so that they can pay this, typically, so they can pay the Social Security tax, because then that's going to impact how much Social Security they get when they go to retire one day. People don't always understand that.
Even if they don't, even if they get paid less than that.
They still may want to. Absolutely, and we're going to cover those scenarios. But good questions. But this is just the first, you got to start someplace, right? So like it says, for most people who must file, these are the thresholds, and all I'm trying to tell you is the logic behind this, that these amounts are directly tied to standard deduction. Because if you don't have more than standard deduction, then by definition there would be no taxable income, and why would you file? Except for the other circumstances that we'll go over here shortly.
Yeah, real quick, more on your question here. Our taxpayers, our clients are very smart. The self-employed, a lot of maids, carpenters, painters, and they come in on a piece of paper ledger, handwritten. Here's my expenses, my mileage, and that's it. And they know how much exactly to report. It's usually below the filing requirement, but they do it knowing how much to report to get those benefits for Social Security and some other things. So they know what they're doing, and you say, "Is this it?" "Yep." And you're going, "Sure." How do you support a family of 5 on this kind of money?
Well,
$8,000. But anyway, they know what they're doing. But yes, they'll come in and you do the return. You look at it, the intake person will look at it and go, "You're not required to file." And they go, "No, I want to file." Once you do the deal.
I had somebody in class say that her parents are now retired, and now they lament the fact that they underreported. They know they underreported, they did it, but now they're really sorry they did that, because their Social Security payment is so small. You can't go back and correct it. You can't go back more than 3 years.
And those with the W-2s, back to your question, is it's below the requirement, but if they have any withholding, they're going to get that back. So they want to come in and file that return.
Yeah, so hang on, and we're going to talk about all that's coming. Okay. No, good point, but hang on.
Do you advise them to be sure you're reporting everything, so you'll get maximum Social
Oh,
Security?
yeah, we
Do make that
absolutely.
recommendation?
Anything else? Anything else? And then we will tell them as well, what the consequence is.
Yeah.
But will they hear you or not?
Yeah, I know.
Yeah, it's up to them ultimately. Okay, so the other thing is, what is gross income? What is this gross income? And it says, it means all income you received in the form of money, goods, property, and services that isn't exempt from tax, including any income from sources outside the U.S. or from the sale of your home. Do not include any Social Security benefits unless you are married on a separate return, 1/2 year, and there's all these tests and stuff like that. But the point is, if somebody's walking in and all they have is Social Security, they don't need to do a tax return. It doesn't matter how much they made. It's tax-free. Social Security is only taxable to the extent you have other income. And so the more other types of income you have, then you may see some of your Social Security Social Security income taxed. Social Security benefits taxed. Taxpayer will do all that for you. But that's what's happening, and we'll see that. You'll see that in some of your test examples. Go ahead and go to the next page. Yeah, I'm gonna keep going. Okay, other situations when you must file. Okay, so maybe you're below the threshold, like we said, but here's some other things. Do you owe any special taxes included in any of the following? Alternative minimum tax, we don't see that. Additional tax on a qualified plan, including an IRA or other tax favored accounts. Because remember I mentioned early on, if you're below 59.5 and you took a distribution from an IRA or some 401k or something, then you have to pay, if you don't have a hardship, then you will be assessed a 10% penalty on that distribution. So if you took out $4,000 and didn't roll that over in the prescribed amount of time, then you could find yourself, your taxpayer could find themselves having to pay $400 and a 10% penalty.
Does the
Separate.
1099 show the disability by a different classification?
No,
Or
that comes through our interview process.
So we would say it and then check it.
And then we ask them, yeah, what did you use the money for?
Okay.
And then we match that against the hardships that I'll show you where those are. The last thing you want to do is show them the hardship and say, does any of these apply to you?
Yeah.
They'll go, oh yeah, all of them. Yeah, no. So, yeah, but I just need you all to remember, there's potentially a hardship exemption that could get them out of having to pay a tax for early distribution.
Do they have to have documentation of that?
I'm gonna take their word
Okay.
because it's on them. I'm sitting there looking them in the eye, they go, okay, now, remember, if you get audited, you're the one that's gonna have to prove this to the IRS.
And that would be like medical bills or whatever they might have.
Yeah, some things we have a higher threshold, and
Yeah.
we'll talk about those, but number-wise, but this kind of stuff, yeah, typically they won't have it with them, but it's definitely a conversation.
And if they get audited, what are they looking for? Like, what is the IRS looking for?
It depends on what the circumstance was. Like, one of the exemptions is higher education expenses. So they'd have to have invoices to show it was for that year, who it was for, the qualified institution, et cetera, et cetera.
They call those line item audits with IRS when they do those. It's specific subject or topic on the return that they want to question and validate.
So you must file household employment taxes, Social Security and Medicare on tax on tips you did not report to your employer. Some people get tips and that's not reported, so they want to report those again, because they want that benefit for the Social Security, but we have to know about that, and that would have to be that would show up under, I think, Schedule 5 other taxes. There was one of those line items talked about that specifically. Recapture first-time homebuyer credit. As we'll learn later, back in 2007, the government, our economy was in the tank. Y'all are all too young to know this, remember this probably. But one of the things the government did, in addition to providing subsidies to buy cars even, they would give you a loan of up to $7,500 to buy a home. But you had to pay it back, minimum of $500, or up, yeah, at least, I think it's at least $500 a year. Yeah, over 15 years you had to pay that back. Unfortunately, well, not unfortunately, but guess what? In 2008, they made it a grant. So if you happen to get that money in 2008, you didn't have to pay it back. But all the people that got it in 2007 have to pay it back. And that's why that person, maybe they don't have a filing requirement, but they have to make their installment on that first-time homebuyer credit, would have to file a tax return. And that's what that scenario is referring to. Write-in taxes included uncollected Social Security, okay. You capture taxes, all right. Your spouse received health savings account or Medicare Advantage MSA distributions. That would be if you didn't use them for qualified medical expenses, as we'll see later, then you could be taxed on that. You had net earnings from self-employment of at least $400. So that's for our sole proprietors. So the sole proprietor, and we were talking about this earlier, comes under a different threshold. If they have at least $400 in profit, they should be doing a tax return. They're required to do a tax return. But again, they'll have to tell us that, because typically, a lot of times it's their own records they're keeping and they're bringing to the table. Let's see. You had wages of $108. 108 or more from a church or qualified church organization exempt from, wow, okay. That's pretty specific. I've never seen that one. Advance payments of the premium tax credit were made for you, your spouse, or dependent who enrolled in coverage through the marketplace. Yeah, and we'll talk more in depth about that, but basically, if you got a subsidy from the federal government to help you pay your health insurance monthly premium, then through the tax return, you have to reconcile if that subsidy was too much or too little. So you may get more, you may have to pay part of that back. Because when you apply for health insurance through Obamacare, one of the questions they ask you is how much do you think you're gonna make the following year? So back in 17, when I was applying for 18 coverage through Obamacare, that was one of the questions. And if I said 40,000, that's how they establish what my monthly subsidy is. And now, my tax return's ready. And I found out I made 45,000. So now I have to pay back some of that. They gave me too much subsidy. Or I made 35,000. I am eligible for more subsidy. And that's why you have to do a tax return. It's one of the obligations once you take, if you take and purchase your health insurance through the marketplace.
Are most of the people that you all get, do they have health insurance through the marketplace?
Well, a lot of them do. I can't tell you what percentage, but a good number of them do. But like our I-10s, as we'll learn, there are a lot of exemptions. And people that have an I-10, they're exempt. So we get a lot of I-10 people, they don't have to have health insurance. 6, advance payments of health coverage tax credit were made for you. Yeah. Okay, that's the same thing. You have a net tax liability that you have deferred by making an election. And I'm not sure what that is, but we don't ever see that. That last one?
Yeah.
Yeah. Okay, chart D.
Okay, wait, back to the first time home repayment bill, they have to have the prior, we need to see the prior return, how much to pay.
Yeah.
Yeah, okay.
Yeah, we'll get into that.
Okay, good.
Yeah. So chart D, who should file? Here's some others. Even if a taxpayer is not required to file a federal income tax return, they should file if any of the situations below apply. You had income tax withheld from your pay, pension, Social Security, or other income. See, here, this one especially we see with kids that are working high school, college, right? They're still a dependent, as we'll learn, of their parents, legitimately. So the parents are claiming them as a dependent, right? And so chances are, a lot of times they'll go, well, there's no reason for me to file because mom's got, and a lot of people think that, in fact, the kid's W-2 should be on the parent's return. But no, you don't that's a different entity, right? So the different individual. So the child, we prepare a tax return for that child to get as much of the federal income tax withheld back to them as possible. They may not get it all, but they could get a good part of that. But if they don't file, then they lose that money because when an employer pays you, they don't know what your entire tax outlook is. So they automatically, based on the W-4 you give them, will take out part of your money that they owe you and send to the IRS as a prepayment of taxes. Yes, ma'am.
So if someone's claimed as a dependent, we still can do their taxes as well?
Absolutely. And they'll tell it. They should be telling us. And it's one of the questions on the intake sheet. Right up top, if you look at your intake sheet, it should say, are you a dependent of somebody else? Does somebody have an intake sheet? Can you look at page 1? Does it say that? Yeah. And when they tell us that, then we know to make sure that they don't claim themselves as a dependent. And the standard deduction will be calculated differently. The taxpayer's going to do all that for us.
Line 10 right here, Bill.
Yeah. Yeah. Can anyone claim you or your spouse as a dependent? So yeah, but they still want to file. They still should file because we want to get as much of that federal income tax withheld back as possible.
You explain to them at that point what it has to be to claim them as a dependent?
Yeah, well, we're getting all the information, to get through that. If mom and dad have a question, we talk them through that, yeah. It's typically if they're not a dependent and they think that they should be, that you have a conversation. But if they are dependent, everybody's happy, typically, you know what I'm saying? Okay, 2, you had estimated tax payments for the year or had any of your overpayment from last year's applied to this year's. Remember I was talking about the sole proprietors, the self-employed? We're supposed to make quarterly payments throughout the year because the W-2 person is getting federal income tax pulled out of their paycheck every 2 weeks or however often you get. But the self-employed guy, it's on him to make these quarterly estimated tax payments based on the income that he's made, right? So that he doesn't owe it all at the end. So they have to tell us that. No, Very few,
Okay.
very few of our clients do that.
Yeah.
Very few of our clients. But that's part of how we coach them. And we say, look,
You give it to them the next year.
yeah, we say, see what's happened this year? You're hit with this big bill now. Now you gotta go enter into a payment plan and you got fees and interest. What you need to do is set some aside, 15% of your gross, set aside if at all possible or something. It's hard though, because they're doing two things. They're paying last year as well as, so it's effectively 30% or they're, and they, it's hard to live on that. But nevertheless, we coach them, we give them guidance and advice, and hopefully they'll do that. And we give them the forms they need to pay the quarterly as well. You qualify for the earned income credit. This is a big thing for us. This is one of, again, one of the planks of our mission is to make sure as many people, in our service area, make sure that they get their earned income credit. It is a refundable credit, as we'll learn, so even though they have no tax liability, even though they may not necessarily need to file, they can get money in their pocket, up to $6,500 last time I looked, depending on how many people in your family and what your AGI is. So it's substantial. It's a good hit. And then 4, you qualify for the additional child tax credit. Again, that's a refundable credit. So just like the earned income credit, even though you may not have a filing requirement or tax liability, we can get some money in your hip pocket with that. Taxpayer's going to do all the calculating for us, okay? You qualify for the refundable credit for prior year minimum tax. But by the way, this, I forgot to say, this also says you had estimated tax payments or you had overpayment for last year's applied. So like if I'm due a refund this year, I can ask the IRS to hold the money for my next year's tax liability and they'll apply that. I would never do that, but for some people it's a good money management thing, right? To have that available. What else? You qualify for a refundable portion of American Opportunity Credit. This is one of the education credits we're going to talk about. It's split. It's both non-refundable and refundable. 40% of it, or up to $1,000, is actually refundable. So that could go into your pocket as well. You receive a 1099-B and the gross proceeds plus other income exceeds the filing limits in Chart A. Okay. You receive a 1099-S, proceeds from real estate transactions. Okay, these are, I know this is one we never deal with. We never deal with that one. We never deal with that one. You qualify for the premium tax credit, and we talked about that. That has to do, again, with affordable health care and the purchase of that through the marketplace. Okay, wow, that was a lot, right? But the truth be known, when we sit down, where I have seen where somebody is sitting in front of me and they don't need to do a tax return, it's typically, and Paul can comment on this, it's typically my Social Security people, the older folks. They're coming in, half the time I think they just want somebody to talk to. But, or they carry this mistake around that they have to file. Everybody thinks they have to file, but as we just learned, there are circumstances where we're not. And, we're glad to help them and all that, but we also hate to think that they're sitting there for hours waiting for that. But that's probably where I've seen the issue more than anything else.
Yeah. And if they're old school, they want to mail it too as well. They don't have to file here. Do what you want with it. We'll give them a copy of it. We get the count for it as a paper return.
So only do you have other kind of income, like from rent?
Yeah, so there are things that are out of scope. So like rental property, the IRS does not allow us to do. We can't. So they need to go to, and we'll tell them that. Intake should catch that, but if they sit down with us, and it's one of those things they bring up, then we'll say, you know what, we're not able to do that. Hopefully, we've seen that on the intake sheet itself, because we've asked, is there any other kind of income? And hopefully they've written that down, and when we first sat down with them, we would have seen rental income. Oh, wait a minute, that's not something we can handle. Okay?
So what if a family comes in and they're not sure what filing status benefits them the most, whether it's married filing separately, jointly, and
That's
they
a
want to...
great question, because we're going to talk about filing status next, okay? So let's do that, and we're going to go to B8, Bravo 8. Filing statuses. By the way, I can't stress enough to you, and it goes without saying. All the information you're seeing is confidential. And one of the ways you can find yourself out the door quickly is if you're discussing your client's information with anybody else other than your site manager. They're trusting us to keep this information confidential, and it's very personal, and so it's, don't even go home and talk to anybody about it. I mean, it stays, what happens at the tax center stays at the tax center. Yes?
So if we do have a state return, do we still prepare the federal form and then they just have to go somewhere else?
Yeah,
for the
typically that's
state
what we
one?
do, unless we have somebody on site that wants to tackle the state, but I don't even know if TaxSlayer has all that
No,
software.
we don't do any of it, because state of Texas doesn't have any.
No, but for another state.
What if they move here?
Yeah, yeah.
If they've moved
If they
from another
moved here.
state
Yeah.
here?
Oh, yeah, we'll do the federal only, period.
Oh, okay.
Yeah. Now, bordering towns in the state of Texas, like El Paso, New Mexico, they will do the state return because it's like the next door neighbors. But here in central Texas, we don't do any other state stuff. We just tell them, on the W-2, we'll show what state they've earned income. We tell them, I like to tell them at the closeout, you may have a filing requirement with that state, go to their website, I don't know where to go, and they take care of it, or ignore it.
Okay, as we saw on the top of your 1040, look at your 1040. Everybody get your 1040 out. And the very, very tippy top, you'll see the 5 potential classifications, right? You're gonna see the 1040, not the intake, the 1040. The 1040, everybody got your 1040? Remember that one? Got your 1040?
Yeah.
Those are your schedules. Okay. This is your 1040. Okay? Got your 1040? You know what your 1040 is? Yeah? Everybody's got a 1040. Good. Okay, you got your 1040. You know where that. Yeah, so you'll see at the very top, filing status. 5 different choices. So let's talk about these. They're single, married filing jointly, married filing separately, head of household, and qualifying widower. Remember on the intake sheet, pull out your intake sheet. What line starts to help us figure out what their filing status is? What lines? Part 2, right? See part 2? You have your intake sheet? Everybody see part 2, intake sheet? You got your part 2? Yeah? See all that part 2? You all with me? Okay, yeah, so we're starting to put these pieces together. So what do all of these mean, and what qualifies from one to the next? And so B8 through, yeah, is this 8? B8?
Yeah.
Okay. So single is probably the easiest because that implies, right, that you're unmarried or considered unmarried on the last day of the tax year, and that's when the snapshot is taken. This is qualifying person.
I think it's one page up.
Okay, go one page up, sorry. Oh, yeah. These are all these trees that make me crazy. Let's go further up and see what else I can find.
Yeah, that was B8 stuff.
It may only be the, hang on a second, let me see something. We can use that if we need to, that would be a problem. But I'm just gonna talk about it. Okay, so, yeah, this, we'll get the head of household in a minute. Single implies you're unmarried or considered unmarried on the last day of the tax year, and you do not qualify for another filing status. It says B6 has some interview tips. Let's see what that might be. Oh, yeah, I see. Okay.
Should be 7, and this is 6 here.
Yeah, so come on down to B7. We'll do this. Okay, so determine the filing status. Let's work through the tree together. So again, snapshot taken, what is your status at the end of the year? If you're married, all you gotta do is be married on December 31st. In Texas, you can also be common law married, right? Same-sex couples can be married now in Texas, and we recognize that. So they'll tell us with their intake sheet whether they're married or not. What was your marital status? Never married, married, divorced, legally separated, or widow? Bless you. And this includes on the married, registered domestic partnerships, civil unions, or other formal relationships. And if yes, if you're married, did you get married in 2018? Yes or no? And B, did you live with your spouse during any part of the last 6 months of 2018? And then if there's a divorce, it asks you for the specifics on that, so we have that as well.
State of Texas, after, what, if you pass yourself off as being married to the community, as they say, friends and family, that is considered married filing joint in the state of Texas.
That's right. So married filing joint can be chosen if you're considered married on December 31st and both you and your spouse agree to file a joint return. On a joint return, both spouses report their combined income and deduct their combined allowable expenses. In addition, if one of the spouse dies in that year, you can still do married filing joint. We would list both parties with the deceased spouse noted as deceased, and the other one is the additional spouse, or the other spouse, whatever, and then they can still do married filing jointly for that year of death, in that year of death.
What if you have a person who lives here and the spouse is in Mexico, say, and they live there 2 months out of the year? The person from here lives there 2 months out of the year.
As long as they're married.
But the spouse never lives there.
As long as they're married, I mean, that's,
It's,
because it's only dependents, they ask how long did they live in the household, right? But
Dependents.
husband, wife,
Yeah.
doesn't matter, because I have a few people that live in Europe,
okay.
and they're married filing joint.
Yeah.
So as long as that spouse that's living abroad, as long as they have either a social security number or an I-10. Yeah, because we have to have an ID number, either a social security number, an I-10, or I think there's the adoption I-10 as well. One of those three numbers, you gotta have that to drive the tax, put them into the tax return and include them. The challenge often in those situations is that it's a little more difficult for them to file a tax return, because if the spouse is out of the country, we prepare a paper return for them, then they have to send it wherever the spouse is, get it signed, and then they mail it in. So, but it can be done, yeah.
But if the children did not live with them, they don't get child credit, is that correct?
They have to be within at least 6 months, as
Yeah.
we'll learn, as we'll see here shortly. Yeah, and that is a little different.
Yeah.
Okay, so married filing jointly, as Paul says, there's a nationwide law which says, well, two things, that same-sex partners are entitled to file a joint return, as well as common law marriages, openly presenting themselves as married, however, no formal marriage license. And they'll look at you and we're like, are you married or not? I don't know. I'm like, well, I can't tell you. So let me just explain to you what the law says, right? But see, so what happens? There's often a game going on too, and I talked about you'll find yourself, because remember, like our earned income credit that we're going to learn more about, what you're going to learn is that everybody in the family needs to have a Social Security in order to qualify for the earned income credit, which is refundable. So maybe one of the spouses has an I-10, and so they know that they need to do head of household, not married filing jointly, because if they do married filing jointly, they won't get the earned income credit. If they do head of household, they would get the earned income credit, because the parties in the head of household tax return all have Social Security numbers, right? And so through our, I don't want to say interrogation, through our interview, we get to that. But that's why we ask these questions, because they're supposed to answer them honestly, but they'll slip sometimes. I had a guy that was sitting in the waiting area, and I went up to him and said, "Sir, can I help you?" He goes, "Oh no, my wife is having her tax return done." I thought, well, this is weird. Why is he sitting out here and not with her? So I go and I eavesdrop, and come to find out, sure enough, she's doing head of household. And I'm seeing socials and all that. And I said, I'm sorry, but your husband is saying that he's waiting on you. Shouldn't he be here with you? And she just looked at me, like deer caught in the headlight. Obviously, they were not claiming to be married filing jointly. And we looked at the interview sheet and found that out. And I said, look, you guys are obviously married. So you have two choices here, as we'll get back to the lesson. You do married filing jointly, or you do married filing separate. I cannot help you with married filing separate. So if you're not going to do married filing jointly, then I cannot do head of household for you. You do not qualify that. You were married. By your own, testament, you're married. And off we go. And so they chose to leave. And they'll go someplace else and try the same thing. But it's on us to ask enough questions to feel comfortable. And, I chance them to that. But I'm always asking questions, And it's not because I want to know your personal business. I just want to make sure I'm doing the correct thing for you and giving you the best treatment. By the way, married filing jointly, you get the best tax treatment. So you should want to do that, all other things being equal. But, so that's the case. That's what married filing jointly is. Let's see. Both taxpayers must have an identifying number, either a Social Security card, green card, or an I-10. We talked about that. What else can I say? Married filing separately. Like I said, you can split withholdings, you can split credits, but we're not doing that. So just suffice it to say that if we see a married filing separate, and that's what they want to do, which is they're right under the tax law, we can't help them, and they have to go someplace else. Head of household. So head of household, this is where we'll get into this, is unmarried or considered unmarried on December 31st and paid greater than half the cost of keeping up or maintaining the home for greater than half the year, and had a qualifying person or dependent living in their home for greater than 6 months. There's several tests here that we're looking for, right? We got to know that head of household, it's advantageous for them to go head of household because they get a higher standard deduction for starters, right? And then they can also claim possibly child tax credit and dependent care credit and some other things that we'll see. So the head of household is it's key to understand, because what the scenarios we have seen that will come up and challenge you are that you have two single people living in the same house, okay, and each of them has a dependent. But you can only have one head of household per house. And they both want head of household. Because otherwise, one does head of household with a dependent, and the other one does single with a dependent. So you can actually have a dependent as a single taxpayer as well. So we have to discern who's going to get the head of household classification. And that's where we tie back to who's paying for the upkeep of that, who's paying the rent, who's paying the mortgage, who's paying for better than half of that, whose name is the lease in, is something else we may have to look at. So it can get a little sticky in those situations. They don't happen often. Pretty often, I would say everything's pretty cut and dry, black and white. But clearly, we have to know the questions to ask to discern and be able to call something off and put it in another category. I had a woman come in last night, and her son is now 25 and going and working, and she had him down as a dependent, and because she got him last year because he was still he was in college full time, he was 24 or under, and he qualified as a dependent. Even though he worked, she could claim as a dependent and be head of household. Well, now he's 25, so as we'll learn, he's over that age, and he can no longer be a dependent because he made more than $4,150, so he can't be another relative dependent. And she's like, but can I still be head of household? I'm head of my household. He lives there with me, but I'm head of my household. I said, no, unfortunately, the definition of head of household is that, as I just explained, you have to have a dependent as well as be unmarried, et cetera, et cetera, et cetera. So she was very disappointed, and her refund dropped by like $700 because I had to put her down as single with no dependents, right? And I said to her, well, what you need to do is charge your son rent to make up the difference between you and him. But nevertheless, that's an example of the distinction in the classifications and the impact, the very real impact that they can have. And it can go either way. We'll have people come in and say they want to do married filing separate. And we ask, well, why? Because we've always been told that's the best way to do it. And we're like, well, no, that's not necessarily true. Now, if there are mitigating circumstances, you want to be separate from your husband or wife because they have some tax liability or something, then, you know, maybe that makes sense because you can isolate, you can make sure that your refund isn't applied to your spouse's liability if he's carrying forward one or vice versa. But, you know, you give up all of these refundable credits and favorable tax treatment. Did you have a question?
Yeah, what if there's, like multiple families in one household, like there's one family with 4 dependents, another who's retired, another who's working?
Yeah, I know, right? That's a very good question. You gotta sit down and figure out the flow and see who's paying for what and, you know, whose name the house is in and who's paying utilities and groceries and all
But
that.
what if it's all of them together?
Well, you're gonna call your site manager and we're gonna sit down and we're gonna talk about the monies and see who's actually paying what and figure out how to approach it. But that does happen, you're absolutely right.
Are they trying to claim head of household for each of those components?
Well, they probably don't know what they need
Yeah,
to
they
do.
can't.
We have to help them
It's
figure
only
it out.
one head of household, right?
Mhm.
Really, for one
That's what we said.
address.
But you may have some, she's saying you have married filing jointly as well, and you,
Okay.
and you got some
A
other
mix.
households and mix.
Yeah, you're gonna hear a lot, due diligence is what we're supposed to do, is ask those questions.
Yeah.
Well, what if they come in separately though, and they've got all this same address?
Well,
Is
so,
that not a
yeah, no,
misstep?
absolutely.
And
Very
then
good
show
question.
up.
And so what happens is they're supposed to put down here in part 2, section 2 says, list the names below of everyone who lived with you last year, other than your spouse, anyone you supported but not with. Hopefully, they're putting all these names down, and then we're gonna have to piece together the family tree and find out what's happening. But they may not.
Yeah.
They may not, and it's only by chance that we'll find out that, yeah, there's another single person, you know, with a dependent, and they both claim head of household. So unfortunately, they're not gonna make it through our knowledge filter, and they're gonna both go to the IRS, and the IRS will send them letters, and then they're gonna have to
Because
figure
they
it out.
will match that.
Yeah, yeah, because you only have one head of household per house. So we ask, that's why I say you ask as many questions as possible, but some cases.
What's nice, the software will catch if, same family in your situation, a bunch of people there, and someone's double claiming the kiddos, we go and put it in the system, it's gonna reject out saying, someone's already claimed this child. Then you sit and ask them again, software's telling me someone's already claimed little Johnny.
But
Oh,
that won't
what?
tell us real time. That would only be after the tax return.
If
is
someone has
filed.
already been, yeah, if someone's already filed ahead of that person, it will
Oh.
kick it back out, reject it out.
But not to us immediately.
No, yeah, we'll
No,
get an error
that would
message
be,
that night.
that
and
would
we-
be from the IRS. Yeah.
Yeah, when we transmit, we'll get a rejection for it
Yeah.
saying it was already claimed.
Yeah,
So it
yeah.
could be the next day we get the rejection, and we have to call them in and say, all right, who's claiming who? You guys need to
Figure it out.
figure it out, fight that out.
So there's going to be one head of household per house.
Per rooftop,
Yes, but there could be one head of household, one married, one single.
One married, filing jointly, a
two- or
single.
two married.
Yeah,
filing
yeah,
together, like
absolutely.
three
You,
or four
yes,
families.
yes, absolutely. You could very well have that. Absolutely. Very good point. You sure can. That's a busy house too. And we would love, you know, ideally they all come together and we
Yes.
can do it for them. Map out our strategy and I get 3 of y'all going, you know, we make sure we give them the best
They
treatment.
usually do. You bring the whole family. I'm sitting reviewing one. Next thing, well, where's this child? They're, oh, they're at that table over there, which I don't know. I'm like, wait a minute. Hey, you come over here, sitting down with mom and dad. What's going on? I had 2 guys that were twins, and the parents were over here. Each twin was getting the return done separately, and then there was another child. And I'm reviewing. I go, wait a minute. This is the same address. And I said, everyone comes to the same table. And it turned out the benefit wasn't how they should be filing. I went back and changed everything to better benefit the parents
That's it.
as married filing joint, of course. And one of the twins was working, finished school. The other one, no, you need to still claim this son. He's still in school. So when they all come in, they don't always tell you they're there.
Yeah.
But when you review and you go, wait a minute, is this your family?
Yeah.
It's fun. It's keeping all the balls in the air when they're all there.
But it's the launch, it's the first step, and we really want to make sure we spent the time necessary to get their filing status correct, because it's going to drive so much of what we can or cannot do for them. So the 5th status is the widow or widower with dependent children. And so for those folks, taxpayers that are widow or widower, you know what that means. They have dependents. As long as they have dependents, they can get tax treatment as married filing jointly would 2 more years beyond the date, the year that the spouse died. So the IRS gives you 2 more years to continue your married filing jointly status. In effect, that's what's happening, because they get all the same tax rates and treatment as the MFJ, okay? But it's a widow, widower, and it's the following 2 years after their spouse died. And they have to have dependents. You get that. If they don't have any dependents, then they just get that same year MFJ, and then it's over. Does that make sense? Okay, comprende? Okay, so let's move on. Unique filing status situations. It says,
I had a quick question on the footnote on that last page we were just on. It says if one spouse dies and the other remains in the same year, the deceased spouse files married filing separately. So the deceased spouse still has to file taxes?
yeah. Yeah, but if they're filing separately? Yeah, death does not, oh, I'm sorry. Death does not get you out of reckoning with the
Heard the
IRS.
term death and taxes, don't do one before the other. That's what we used to tell them.
Yeah, no, yeah. Uncle Sam always wants his piece of you. Okay, I'm gonna move on. Let's see if there's something else I needed to cover here. So, just so you know, and some, maybe some of you all have encountered that. Anybody familiar with DACA? Or Dreamers? Those are different, yeah? So, DACA and Dreamer individuals will have a Social Security card, but it will have a special notification on there for work authorization only, and I can't remember what else there is on that. But we just want to know that when we're doing our input, because it may impact some of our taxes. And I think the best thing is if you, what do you do with that? Is there anything in particular?
Special? No. No,
Yeah.
the document, I have quite a few that come into my location.
Yeah.
We just do the tax return, they have a social security card, it looks like a regular one, but there's something across it that says DACA on it, and we know what to do with it at that point.
Yeah. What's that?
You need to review that social security, but it's valid only for
Work.
Work
Yeah.
only, yes.
Work only.
Right.
It used to have an impact, because it would give us an exemption for healthcare if they didn't have healthcare. But now, it's not really gonna even matter anymore, because we can use, we have a default exemption we can use, but that's how we recognize. That's how it could impact their tax return, because they're like I-10. In some cases, they don't have to have health insurance.
Do you know why they're DACA dreamers?
Student visas or stuff like that?
No, it's that their parents came to the US,
And they were
visa
kids.
expired, they went home, and they stayed behind. Now they can't leave the country because they can't re-enter, so they were underage at the time, and the government has given them this status to stay here.
So yeah, the Dreamers are legal status to certain undocumented immigrants who were brought to the U.S. as children, generally the parents, and attend school in the U.S. Yeah, and they're trying to make it permanent. That's what Congress is fighting over right now, in fact, between them and the president, trying to negotiate that in the wall and other things. So hopefully that'll get resolved. Okay, so I'm going to move on then, and let's talk about what constitutes a dependent.
Excuse me.
Yes.
For couple, marriage couple, one
For
of
what?
them, for married.
Married couple.
Yeah. If one of them has a item, other one has a social card,
Hmm?
they should file jointly, right?
It's their choice, married filing jointly or married filing separately, but
We don't file separately, right?
they could, if they wanted to. It's their choice. They can either do married filing jointly, which would be to the benefit, or they can do separate. But it's their call, what they want to. But I'm sorry, we do not do but they can go someplace else and do married filing separate. We
We
just
do
can't.
not.
We just can't do their.
It's out of scope
That's
because of the
what-
complexity
thank
of
you.
it.
Yeah, yeah. Okay, so let's talk about dependents, and it's Pub 4012, C1 through C7. There's 2 types of dependents. There's the child, which is the more prevalent one,
Which one, see what?
C1 through C7.
Okay, got it.
But there's also circumstances where a relative or another individual can be your dependent, okay? And it's important to know these things up front, to establish these things up front, because again, it impacts on the back end whether or not somebody's going to get certain credits, non-refundable and or refundable credits. So let's talk about the child. Yeah, here we go. This is great. This is the best table of all. So we'll just read it together. This is only an overview of the rules. Okay, we get it. You can't claim any dependents if you or your spouse is filing jointly could be claimed as a dependent by another taxpayer. Well, that makes sense. In other words, you can't be claimed multiple times as a dependent, right? And it's important because people will sometimes try and do that. And we tell them, make sure nobody else is claiming these, because what's going to happen, if you claim them, somebody else is claiming them, get to the IRS, you're going to hold up your refund, and then the IRS is going to throw it back to the two of you and say, prove that you deserve the dependent. So you have to send in school record, baptism certificates, proof that the kid lived with you over 6 months, et cetera, et cetera. You provide for them and all that. You can't claim a married person who files a joint return as a dependent unless that joint return is only to claim a refund of income tax withheld or estimated tax paid, okay? You can't claim a person as a dependent unless that person is U.S. citizen, U.S. resident, alien, national, or a resident of Canada or Mexico. We have treaties. U.S. has treaties with the adjacent countries, Canada and Mexico. So there are some situations where a resident of Canada or Mexico could actually be a dependent if they meet the residency test and other things that we've talked about. Okay? Used to be more liberal, but they've actually wheeled that in some, and it's not. We were talking about this last night. You can't claim a person as a dependent unless that person is your qualifying child or qualifying relative. Okay, so let's talk about the definition of a qualifying child first. The child must be your son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, stepbrother, stepsister, or descendant of any of them. Remember, they're answering all of these questions for us. If we look in part 2, all this, that's where we're going to start getting the answers to these questions. Test 2, the child must be, there's an age test. The child must be under age 19 at the end of the year and younger than you. Second circumstance, under age 24 at the end of the year, but a full-time student and younger than you. That covers our college kids, because even though they're not living at home, that's considered a temporary address, so it's as if they're under mom and dad's roof still. Probably because mom and dad are paying for all the bills. Or C, any age if permanently and totally disabled. Test question, test question, test question. All right? Yeah. Okay, third test. The child residency test. The child must have lived with you for more than half of the year. Okay? What does footnote 2 say? Let's go down there, Paul, and see what footnote 2 says. There are exceptions for temporary absences, children who were born or died, children divorced, separated, who live apart, kidnapped children, divorce decree, can't take your former spouse, blah, blah, blah. So this also covers college, when somebody's away at college. Okay, let's go back up. Number 4, the child must not have provided more than half of his or own support for the year. So the converse is, the person that's claiming the dependent has to provide more than half, right? And again, they're telling us all this. We're not making this up. We're just making sure that this all makes sense. 5, the child isn't filing a joint return for the year. And rest, blah, blah, blah. 6, if the child meets the rules to be a qualifying child of more than one person, you must be the person entitled to claim the child. That only makes sense, right? So it's, the keys are, all of these are important, but, clearly 1, 2, and 3, the age restriction. So that's going to cover, the first is going to cover your up through high school, right? Because typically they're in high school, so they're living with you, pretty black or white there. Under age 24, those are the kids that are at school, maybe going to college. There's full-time students, so we can still claim them as a dependent, right, for this purpose. And then again, any age, permanently. But meanwhile, you provided for more than they've lived with you for more than half the year.
I have a question.
Yeah.
For number 3, the children must have lived with you. So for the number 2, the children must be under 19. So if they're 18 and they still in college and they live in the dorm, how they can live at the house half the year?
But it's as if they lived at home. the IRS recognizes a kid that's at college as a temporary address, but they still consider mom and dad's home as if they live with their mom and dad. So it's okay, that's allowed, okay?
And if they study at another state, they have to move to another state.
That's right, that's okay. They still meet that test, okay? Even if they didn't actually physically live with mom and dad, being away at college, full-time student, IRS says, it's as if you lived at home, so it's okay. Yeah.
If these children live in Canada or Mexico, though,
Yeah, so that's fine, but they still, no, actually, they have to live with you. That's not a temporary address.
yeah,
It's only for school.
okay.
Yeah, but no, you're right. If they lived in Canada or Mexico for 6 months plus, then no longer can they be dependent. Yes.
What if there's an adult child, not going to school, doesn't have.
Let's talk about that next.
Yeah,
Yeah, so let's go. All right, so clearly that adult child, you're saying isn't going to school, right? I cut you off, I'm sorry. But I'm thinking what you're saying is that he doesn't qualify as a qualifying child,
Okay,
right?
yeah,
Because, why?
because it's older.
And he's not going to school. So he doesn't fall in any, and he's not permanently or totally disabled either. Right, so now we go and see, hey, maybe we can get him in as a qualifying relative, which is the second option, right? So let's talk about that. So, test to be a qualifying relative. Can't be your qualifying child or the qualifying child of a taxpayer. A child isn't the qualifying child of any other taxpayer. The child's parent isn't required to file income tax. The person either A, must be related to you in one of the ways listed under relatives, or B, must live with you all year as a member of your household. So, by the way, I highlight B because that could be a non-blood person. Maybe it's a friend or somebody that you're taking care of. I've seen that scenario. But they have to live with you all year. So it's not 6 months threshold. It's all year long they stayed with you and in your home. And you pay, for everything. But we'll also see in that case, the third test says that person's gross income for the year must be less than $4,150. And often they'll get tripped up on that because they have more income than $4,150. But it's conceivable. What does gross income mean? It includes income received in the form of money, goods, property, services that is exempt from tax. Don't include Social Security benefits unless, this is a little bit wordy here, unless the person is married, filing a separate return, and live with their spouse at any time during the tax year, or if one half their Social Security benefits plus their other gross income and tax exemption is more than $25,000 or $32,000. So if they make more than $4,150 and they do have Social Security benefits, then we may have to go into this additional income test to see if they're under that threshold, okay? But I can't remember this stuff, but it's here, and I just need to make sure you know where it is, right? And that we're aware of at least the highlights, and we'll get it. I know it's a lot of words. Fourth test, you must provide more than half the person's total support for the year, not unlike that one, okay? So those are the two avenues where you can claim a dependent. Yes, ma'am?
So, for example, if there is like a grandmother or grandfather that live half a year in Mexico, for example, because of the weather, and then they come half year here, they have the minimum pension or income, Social Security, because they didn't work a lot. Does that qualify as a dependent?
What's the answer? They don't? But didn't we learn last night through the head of household? Yeah, that was just for head of household, right? Yeah, for head of household they could do. But they would have had to live in the U.S. at least 6 months. And it's this. This is where they go into. Yeah. There is, under head of household, where did we see that, Rosie? We were talking about that last night. Where you can take parents. Is that it? Yeah. Yeah. What is it? B8?
B8.
B8. Well, there you go. Let's see. let's go back for a second.
The last note.
Yeah, footnote 6. You're eligible to file as head of household even if your parent, whom you can claim as a dependent, doesn't live with you. You must pay more than half the cost of keeping up the home that was the main home for the entire year for your parent. So that would be the one case where you could, your parent would help you, even if they lived in Mexico. It could bump you up to head of household for that purpose.
For all year, even for all year.
I have a question.
Yeah, yes.
If I live overseas and I work every year outside and I have 2 kids here, I support my kids, I pay their bills, they go to school, they are full-time, I still have to file, right?
Yeah, I think so. And you're not, are you filing any place else? She works overseas, she just still has to do a US tax return? Doesn't it depend on the nature of the income?
Yeah, you may fall into international income for that.
International.
Where's the income earned, in the US or abroad?
From Doha,
From where?
from Doha, from
Doha.
yeah.
Abroad.
Oh, okay.
Abroad.
Yeah, you may fall into a reporting your income as international, worldwide income. That's a whole different,
How about my kids? I support my kids.
You should
They
take them
are
as
full-time
dependents.
students.
well, it depends how you're gonna file as reporting as worldwide income, and that falls in a whole different category outside of our scope, as I said. But if you're just regular earning money here in the US W-2, then yes, absolutely, you can claim them, because they're studying abroad, right? They're studying abroad,
No, they're studying.
No, they study, they live here,
they live here.
yeah, they go to school, they are full-time
Okay.
students. Can I claim them as dependents? Because I don't live here, I live in Doha,
Oh.
not here, that's my.
We don't know.
Yeah,
That's
no,
beyond our
I
pay
doubt
scale.
it that you can file a regular 1040, you may have to do an international return.
International.
Yeah.
Which is out of our scope.
Yeah, we just don't get to
Yeah.
that level. We have somebody that, doesn't Bonnie do?
Bonnie does NR, but it's for UTD students only.
Oh, okay.
Yeah.
Yeah, I'm not gonna tell you something I don't know, but
So the best thing to go to lawyer,
a tax accountant, maybe stop by H&R Block or one of those guys and ask them what they
Yeah.
would consider one of the paper bearers.
Or go to one of our AARP, they're associated with us, other sites, it's through IRS, you know, we're VITA, Voluntary Income Tax, and there's AARP that's partnered with IRS. Go to them, they do outside stuff, because those guys are, IRS gives them higher authority of outside our threshold. They might be able to help you. Go to irs.gov, go to the tax site, look up AARP, they're all over the community in the area. They might be able to get you in the right direction. I don't think they'll do the return, but they'll know what to do with you possibly. It's free help too, by the way, it's free as well. But yeah, yours is a different
It's- yeah.
situation. Yeah.
Yeah. Okay, yeah, absolutely. But anyway, so any questions on those two paths? Can we go back to that chart?
Which one?
The dependency, whether it's a qualifying child or qualifying
Back
relative.
down.
Okay,
See?
again, when the in reality, if it's a carry forward, you know, we'll see which dependents are there, and you can quickly discern if there's an issue or not. Like in my case last night, while I was telling you, the age had changed, and so that's why she could no longer claim her son. And she wanted to as a dependent, but it was on me to make sure that she was meeting that age test, and she wasn't. So I had to, you know, tell her that, no, not only can you not claim as a dependent because now he's 25 and he's no longer a student, he's working on his own, but even though he lived with you, so, but you can't be head of household either because now you're single. Because if head of household, you would have had to have at least one dependent or a parent, as we just saw, even though they don't live with you, yes.
But in that same case, if her son had made under 4,000, then he would have qualified again.
If she, yeah, so we go back, very good question, yeah, so our point. Yeah, if her son had made less than 4,150 and she was providing more than half the support, I guess, he wasn't paying for anything, then yeah, then she could have taken him as a, scroll down, Paul, scroll down, I'm sorry, as a qualifying relative. Yeah, absolutely, he could have been a qualifying relative, yes ma'am.
What are the charge who lives with mom, but that, you know, the dad pays all of the cost.
Yeah, well, that's a big conversation. So what if the kid lives with mom for 6 months plus, but dad, who's not in the household, is paying for everything? Does dad get to take who gets the dependent? Who gets the kid?
Is there a divorce decree? Is there a divorce decree saying who gets to claim the kid?
No, they're just living separately.
Just separate?
It's the residency test that's
Yes,
the issue.
yeah.
How do you resolve that?
Yeah, well, don't quote me, I believe you probably claim, even though they're providing support, but who provides more than 50%, you or the dad?
This is that.
Is providing majority of the support?
But the kid lives with mom.
Yeah.
Is that me? But this was.
No, it's an example.
Yeah,
It's a very good example, though. It's a very good example. So what we're saying is that over here, test for qualifying child, we're talking about the mom, right? Mom, she gets 1, she gets 2. Can you scroll down so we see the other? Gets 3, because the kid lived with her. Keep going. She gets 4, 5. Where does it say? Oh yeah, the child must not have provided more than half of his own or her. Well, so that's not the child that's providing. It's the parent. So maybe she gets him.
Yeah, because he's living with you.
Unless you consider the dad's money as the child's.
Usually in custody situations though, they say well, whoever
No,
the
but this
child
is
lives
Yeah.
Yeah.
that person has to
Yeah,
be
no, but we're just
contributing
talking
at least-
about not
yeah.
custody, it's just they're separated.
Yeah.
But, or they could even not even be married and it's just the baby daddy sending over money that's really paying for all that. Typically, we won't know that, but the honest answer is they won't tell us that. We wouldn't know that. But if you did know that, does it matter?
It depends how much it is.
I know, but if it's more than half, if he's paying for the rent, he's paying for the utilities, and we see on her that she's not making enough. It's one of those where it's clear she's not making enough to afford the kid, but he doesn't have the residency. Does that mean nobody takes the child?
I think she takes it. Yeah, we'd have to look into that.
Yeah,
Ask a couple more
it's a good
questions.
question. We're over here.
I'm pretty sure she would, because I've had that situation before with my child, and because of residence, I showed proof of his residence being with me despite whatever his father provided, and I got the money.
And it's a custody thing.
So you
I
can.
think so.
Oh,
Yeah, it didn't matter that he was paying $700, $800, $900 in child support a year, it didn't matter, didn't even if that was.
Oh, but that was child support.
Right, but it didn't even matter if what he was making was more, but wherever that child's residence is listed at.
Yeah, but if
that's
it
what
were,
supersedes our
child
superseding.
support, then I would take that in as your own income, and we would add that to the income to see, and then it starts to make more sense that you actually have money that you can pay for this kid, right?
Right, but you're not required to
Yeah,
show proof of child, that's not needed to.
because there's child support where they take it out of the wages of the spouse and pay it over to the mom or whoever.
It
So
doesn't
this
show.
could be voluntary child support, which would fall in the same category as support of garnishment of wages or a mandatory payment over to the custodial parent. So you're right. That's why I asked her initially is there a court order on
Yeah,
there?
because a court order will say,
We'll
but
spell it
even
out.
with a court order, I've had this experience too. If that child's residence, even if the court order says dad 1 year, mom 1 year, when you send your documents into the into the IRS showing that child lived with you 6+ months, or whoever that child's residence is, they're gonna give it to that parent. It's weird, so it doesn't, they don't
No,
even
yes
take
and no.
it.
Years ago, because I was
Yeah.
under that category, is they honor the court order now because it's
Now
federal
they-
court and local court,
Yeah,
right? But years ago, I think in the 80s, they changed it to where they can honor it, but you'd have to go before IRS and prove
yeah.
to supersede what the court order does. So
That's
it
why.
complicates it, but yes, they will honor
Well,
the decree.
you
the
know,
divorce
and the
decree.
truth be known, you could just count that money that's coming from the baby daddy in this scenario. I know we're talking different things, but it's a gift.
Yeah.
Yeah, and then that's money for mom, and she's got a gift from him, and that takes care of that.
Yeah.
If there were a question of income, and I think that's how you get around it, as I think about it. He's just giving you a gift, right?
thank you.
That's what I'd say. Okay, let's keep moving. Any other questions? Yes.
So just to confirm, in order to qualify as a child or relative, you have to pass all the tests that are
Yes.
listed?
Yes, all tests for child, there's 6 tests on the child, and qualifying relative, there are 4.
So I couldn't qualify as a relative if I met 1, 2, and 4?
Correct.
Okay.
You have to, it's all inclusive. Yeah, because if you make more than 4,150 in that scenario, that's what I'm assuming you're telling me, then, you have to do your tax return, you can't be anybody's dependent. Can't be that.
On section 2, it reads on there, and
Paragraph 2, on which side?
sorry, on relative.
Yeah?
And your relationship must not violate local law. What laws?
Well, like several wives.
Oh, okay.
Or
I was
husbands.
like, well, is it illegal? That's you, like, I don't understand.
Yeah.
Unless you're from Utah, right?
Yeah.
West Virginia.
Yeah. No animals, please. Yeah. No, I'm just giving you a hard time. Yeah, that's what I could think of. Yeah. Okay.
And must the child be a full-time student the entire year? Like, what if they say they go part-time one semester for some reason?
Yeah. As I recall, they must be at least part-time. Yes. So 1 semester would probably cut it.
Yes, for me, my son, he meet all these. He's actually Scotland for payment.
Are you qualifying relative or child?
Well, child, yeah, child, but his income's over because you look at the depends. It's still at home going to college, so I can claim him even though he exceeds that 4150.
Yeah, you get that, right? Because that doesn't even apply over here.
Yeah.
That 4150 didn't apply over here.
As long as they make the age.
Yeah, they did the age.
Some software, like what I use, it will throw it out saying he made too much. You
Yeah.
can't claim him. I have to go back and
Yeah.
override that.
And by the way, his son's gonna do his own tax return, so he can get as
Yeah.
much back, saying my dad claimed me a dependent, but I'm gonna do.
So you can keep processing even if it asks you, like, have you been claimed on it as a dependent on
Yes.
another?
Oh, absolutely.
Yeah.
Yeah, yes, you have another question.
Okay. I'm just gonna put the scenario out there. I make more than the 4,000, however, I am enrolled more than part-time.
Mm-hmm.
So if I lived with my mom for 6 months or the whole year, she still couldn't claim me as
How
a
old are you?
dependent. I'm under 24.
So, what's the answer?
Yes.
She can?
No?
No, you tell me.
That's what I'm asking.
Well, but remember, look over here. Under
There's no money
age
if
24 at the end of the year, a full-time student. That's what you just told me you are, right?
But I make over the 4,000.
Doesn't
so that
matter because this doesn't apply when you're
Okay.
talking about the qualifying child.
When you're 25, it'll matter.
She got a few more years.
That's it. That's right. Then you gotta start paying rent. Okay, clear as mud, everybody? Okay, so let's get in, we're gonna move on then to income. All income is considered taxable unless expressly exempt by the IRS. An income that is taxable must be reported on a taxpayer's return, obviously, and subject to federal income tax. Income that is non-taxable may still need to show up on the tax return, like gross amounts. And like Social Security, I remember I was saying Social Security, maybe it may not all be taxable depending on how much you make, but the tax return will still show the gross amount and then will give us the taxable amount. Taxpayer will do all that, but that's why if you go to, can you also just pop up to 1040 for a second? Page 2 to 1040, yeah, scroll down. See, like, take a look at the, come back. Yeah, these rows here, these would have the gross amounts, that's what I'm talking about. But the taxable amount may be different, and it would show up here. That's all we're saying. So don't be surprised by that, because IRS wants to see the whole picture. Okay, so yeah, back to, okay, so examples of taxable income. Wages, salaries, those are your W-2, alimony, annuities, awards, back pay, breach of contract, business income, self-employment, that's one we'll see. Cash income, that's again one that we'll have to talk to them about. Hopefully they're going to tell us all that. Compensation for personal services, debts forgiven. This one always cracks me up. It's like, so isn't that cash? Typically, I don't know what they're getting at, but anyway, debts forgiven, director's fees, disability benefits, discounts, dividends, employee awards. You can see the list. Fees, gains from sale of property, gambling wins, hobby, income, interest keeps going. It's exhaustive, right? There's a lot. So the point is, IRS wants their cut.
Everything.
Everything, IRA distributions. Is there anything else down there, Paul?
No, that was it, yeah.
Okay.
Right there.
So, wait. Column 2. Even more, right? Military pension, non-employee compensation, notary fees, partnerships, pensions, prizes, railroads. I'm skipping around, rents, blah, 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 royalties, severance pay, self-employment, social security benefits, supplemental tips, gratuities, et cetera, et cetera. Hopefully, through the interview process and through our intake sheet, they've identified all those for us, right?
Most of these don't have forms.
Yeah, a lot of them will. Yeah, it's a Schedule C's where we don't always have forms, but we'll talk about that. Examples of non-taxable income. Examples of income to exclude when determining whether a return must be filed. Can we scroll down and see those, Paul? What kind of thing? Aid to families with dependent children, child support. We already know that. That's not taxable. Civil damages, damages for physical injury, death payments, dividends on life insurance, inheritance or bequest, insurance proceeds, interest, meals, blah, blah, payments. I'm just going through them. You can look at those. Reverse mortgages, etc. So Social Security benefits portion may not be taxable. I've said that repeatedly. Supplemental security income, that's more for people that are disabled and have a disability and they're collecting Social Security, and that's called SSI versus SSA. Temporary assistance for needy families, veteran payments, welfare payments, and workers' comp and similar payments. Okay. What does this say? If taxpayer received a Form 1099-C cancellation debt, it can be non-taxable. Okay, I think that's enough of that. Okay, so all types of income can be input to TaxSlayer software. You will, however, need to read what's on the computer screen, use the correct income source documents, like you mentioned, in your hand to input the correct information. Where can you get an idea of the taxpayer's income items? Anybody? Where would you look to get an idea? What's that?
The intake.
The intake sheet, yeah. Which section? What page or which section?
Part 3.
Part 3, I'm hearing, right? See all the yes, no's, and all the different buckets of possible income. Okay? All right. Display some online income source documents. W-2. Can we find some? So go back to the 4012. D3. Maybe? So, yeah, go ahead and scroll down. Are you in D? Yeah?
Yes.
What about those who gained financial aid for school?
Well, to pay for like tuition and stuff like that? Yeah, we're gonna see that on their 1098-T. And we'll determine, we'll offset that against their qualified expenses to see if any of it's taxable. But it's gonna be a slightly different path we get to go. Keep scrolling, see if we've run across the W-2s now. Keep scrolling down. Yeah. Okay. So this is, so the first type of income and most prevalent that we'll see are wages, right? And that is documented, as you can see in Part B. Will you flip your page so I can see that with you? You're my assistant at this site, if I don't have one of these. You can see in Part 3, row 1, it says wages or salary, Form W-2. And that W-2 is something that is issued by their employer and is being sent out as we speak. I think they're obligated to send them out by the end of this month, as I recall. And a lot of people already have them because you can go online and get them even faster. Right? Who here has received a W-2? Raise your hand. Yeah, okay, quite a few have. So, can you go back to that TaxSlayer page? I'm in the 4012, I'm sorry, 4012, yeah, where we were. Yeah, so this is actually, so what happens is, with the W-2, what we have to do is input that W-2 into TaxSlayer. So we're just going to input a mirror image of the W-2 into TaxSlayer. Because see, in the old days, before we could e-file, you would take your W-2s and all your source documents and you would staple them to your tax return and put it in the mail and send it. And that's how the IRS knew what the source document was so they could do their check. But now in this electronic world we live in, everything's e-filed, right? We're pushing to e-file. So we basically have to create the W-2 in TaxSlayer so it achieves the same function, basically. Instead of mailing it, now we e-file it. So I say that because it's so critical that whatever information is on the W-2, make sure you put in the template, on the template, where you're inputting that W-2 in TaxSlayer. And it's so easy to miss as we'll scroll down, you know, like the standard W-2, and this would be the page. Go ahead and scroll down a little bit. Yeah, so this would be actually what you're inputting into in TaxSlayer. And you'll see, scroll up a little, Paul? Right, you'll have to say whether it's spouse or the taxpayer, and you want to make sure their Social Security number matches, right, with the document itself, because the employers can make mistakes. And if that W-2 has an incorrect Social Security number on it, then they need to go back and get it corrected.
That's normal sound in this building.
Oh, okay.
It's haunted, don't worry about it.
Okay.
Water pipes.
Yeah, because again, we want to make sure that their Social Security account is credited. And if it's a wrong number, then they won't get credit for that. So it's up to us to flag anything like that. And we've had countless people who will say, you need to go back to your employer and get them to correct this, or you're not going to get credit towards your retirement. And that's, you know, much less create problems at the IRS for this season. But anyway, so things like address, you know, all this is on the W-2s, you'll find. The employer number has its tax ID number, and we would input that, employer name, their address. All this is coming from the W-2 that we're looking at, and then populating into the input side of TaxSlayer. All right, but if the address is different, because for instance, the taxpayer gave us their address when we put it in at the beginning of the input, but they may have moved throughout the year. The W-2 is their old address. But if that's what the W-2 says, you override the new address with the address that's on the W-2. So whatever the W-2 says, what you put.
When the client has an IT number, we need to review.
Yeah, so what Rocio is referring to, if a client has an ITIN number, they get assigned a dummy Social Security number that the employer would have given them. And so we need to make sure and put in the Social Security number that's on the W-2 in the template as well. Even though you're like, well, where'd that come from? Because you got an ITIN, right? But just put it in, because they have to have that for processing. And maybe one day they get to go back and claim that once they get their true social, and they can go back and ask for an adjustment. I think they can do that. But anyway, so that all gets input. Scroll down, Paul, and then keep going. Then this is the meat where you'll have to put in the wages, income tax withheld, and you put in Social Security wages, Medicare wages, and these things will auto-populate. You'll see it once you get into it. The verification code, make sure if there's a verification code, it's like 20 alphanumeric numbers long and letters, put it in, because that helps to cut down on fraud. You may see that these three numbers are not identical. It may be that this is less than these two. Make sure your eye is catching that. What that means is that they've contributed pre-tax dollars to a 401k or something. And so their gross wages are here, but the actual amount they have to pay tax on is less because they used pre-tax dollars that some of you all may be familiar with when you contribute to 401ks, etc. Okay? So again, I will caution you, scroll down a little bit more, Paul, to the box 12s. Yeah. It's these little guys that we'll often miss, like there'll be an X. And these W-2s are like all over the place. They're not all the same, you know, layout. So you have to look real carefully because there could be a little check mark there. You need to check that amount. There could be codes that represent, for us, that will tell us whether they contributed to health insurance, whether there was money taken out of their paycheck for health insurance. You don't have to know these codes. I'm just trying to help you think about these things, right? A D would be there with an amount, or a DD. And you can add several codes because you have D, and you hit add another row, and then there'll be drop down, and you can pick the code and put the amount in. And Same thing with 14, there could be something in that box. So you just need to make sure, don't worry about state information. Just remember, Texas, we do not pay state income taxes. So skip those sections. You don't have to worry about that, okay? On your input. Okay, so that that is what wages on.
If they're a repeat customer that used tax there last year with us, in the beginning of that, it'll populate the information. You type in their social, right? So it says download the information. It'll have that W-2. What you do is you ask them, working at the same employer, it'll have a box to click or unclick for that same employer. If it's the same employer, you'll leave it, and this will be blank. This portion will be blank, but all the top information, man, this thing went crazy. Where do I go? D what?
You're almost there. Keep going.
Okay, let me go back up here. The employer information will already populate because it's the same as the prior year. It saves time, basically, if they're a repeat customer. Yeah.
Yeah, we'll be able to carry forward the information.
That's a nice feature.
It is, yeah. And then all you have to do is double check it and put the new amounts in.
Yeah, put the numbers in there.
Yeah. Okay. So that's wages and taxes. Like I say, that's the most prevalent. We're just going to go 30 more minutes and then we break, okay? Interest income, we talked about that. Interest derives, I think if you just keep going, you'll run into it. Interest income derives from checking, savings accounts, government bonds, credit unions. Amounts are shown on Form 1040, line 2A and B. I don't know that we have Form, I thought there was a Form 1040. Okay, but no matter, scroll back up for a second. On the income side, as we'll learn in TaxSlayer, you'll have an opportunity to pick whether it's going to be interest or dividend. And if you have several, accounts, you just come back and pick again, interest or dividend, and input all of that information. And typically, all it's going to ask, as I recall, is scroll down, Paul. Yeah. See, here's where you get to. So you click on that one, then it comes to this, and it says, are you doing dividend income? Are you doing tax exempt interest income or interest income? You'll get it once you actually work in the form. And then you pick one of those three, and you hit continue, and then you actually get to the point where you input the information itself. Okay? It's just different types of income. Just got to get them into TaxSlayer. Make sure that TaxSlayer is aggregating all of this. So, because ultimately, all this is going to, as we saw early this morning, is going to go to the 1040 and run the math on everything we need to see. Okay?
And what the interest income, the bank interest income, you need to import them for any amount or?
Yeah, well, the bank would send, I think the bank sends out a statement, what, over 200 interest income or 250? Oh,
yeah.
I'm thinking student loan interest, I'm sorry. Yeah, for any amount. Yeah, I just got one for $17. It's like, why bother?
Any.
Postage cost as much. But yeah, any interest income, dividend income they bring us, we will input. Got to. It's taxable income, right? So we need to find a way to get into TaxSlayer.
And these empty boxes here, when you do, I see it a lot with students when taking your test or doing the booklet. If it's blank and your instructions don't say to put in, don't say, what do I put in?
You don't put
foreign
zeros.
tax?
Yeah, you don't put
zeros.
zeros in.
If
Only,
it's-
yeah,
if
good
it's not
point,
in front
Paul.
of you, don't put it in, because
Yeah.
you see a lot of empty boxes. Well, what goes here? Nothing.
Yeah, if you don't have something that goes in that box, then don't. And I always say, check them off against your source documents and your source schedules. Just check things off as you put them in the TaxSlayer. That way you know it's in there, right? So, yeah, you'll see this in one of your exercises. The first exercise we do, they get their statement from their broker's house, and it has a bunch of these different categories. And you'll have the opportunity to actually input this information. So there's dividends. We talked dividends like interest can be both taxable and tax exempt. Dividends derived from corporations and are paid to its shareholders. So again, if you own stock, you ostensibly could get some dividend income. They'll tell us that. We'll have source documents. Let's see. Yeah, sometimes the pairs of unearned income, interest, dividends, capital gains will issue a facsimile income statement, which covers all those types. Well, that doesn't really matter to us. Okay. Alimony, we talked about, that's a maintenance payment that's made by the ex-spouse dictated in a divorce decree. It could be for medical expenses, living cost expenses. Again, they'd have to tell us that. You see a statement for alimony. There's not really a form that comes on, but they would have to tell us that. And we could also, we'd look at their intake sheet, see if they marked off alimony, right? Or last year's tax return is another clue as to whether there was alimony or not. Okay. So, yeah, so the next, so that gets us, we go back to our 1040, Paul, please, page 2. Yeah, so we talked briefly about wages, interest, dividends, then there's IRA pensions and annuities. Those are the type of income that typically a retired person would get. But as I said, there may be situations where people take money out of that prior to 59 and a half, and they'll incur a penalty for doing that unless there's a hardship case. But that's what that's referring to. I had a brilliant thought and it just left my mind. Okay, I'll come back to that. Capital gains and loss. Okay, yeah, I see what this is going. Okay, so before we break for lunch, I'm going to cover the self-employed. So if we go back to Schedule 1, Paul. Business income or loss. Attaching a Schedule C. You know what? I'm going to do it a different way. Go back to the 1040, page 2. Yeah, okay. I'm going to save that for after lunch because it's too heavy to do right now. And we're all like getting hungry. All right, let's talk just for a second. I'm going to continue then. I discussed wages, interest, and dividends. Does anybody have any question on those? It's kind of black and white. You know, they are what they are, right? I'm just trying to give you a taste of these. So the next line is your retirement income. So as I said, some types of retirement income are pensions or annuities, IRA, 401k, profit sharing plans, and most of these will come to us on a 1099-R. That's the type of source document. Again, it's listed if you look in your intake sheet, part 3, under retirement income or payments, number 11. It says retirement income or payments from pensions, annuities, and or IRA, form 1099-R. And you will be inputting 1099-Rs in the scenario that we're going to work on this afternoon. So that's how we figure out if they have any retirement. And we said the 1099-R is the form. It says if you can go to Pub 4491, page 12-2, there's some examples of those. Depending on whether or not the employee has contributed to the retirement plan dictates whether that distribution is fully taxable or partially taxable.
Which one?
The 4491,
Yeah.
12-2.
12-2.
Yeah.
There?
Yeah, scroll down. Go ahead.
There's
They said there should be a 1099-R here someplace. Keep going. Let's see if we can find it. Huh.
No, it was up.
Do we go by it? Well, that's what my notes said. Are you in the 4491?
The one up.
Were you in the form 4491?
Yeah.
Okay.
And then R.
Yeah, it said there's a chart, 12.3. Okay. 1099-R, yeah, can you search?
In the middle, current
Yeah,
products.
it was in the middle.
If you go back.
Back,
Go back.
in the middle. Current product, here, 499 in the middle.
Oh, here we go, right there, the middle of that. I was in
There
the
you
middle
go.
of the.
Oh, okay,
oh.
good.
There we
There
go.
we go.
All right,
That's
thank
what
you.
your 1099-R looks like. And not unlike the W-2, You can see it has gross distribute, well, that's not true. Not unlike the W-2, it has the payer's name, the payer's ID number, it's called the taxable identification number. The recipient, that's us, so it should have our social security, our client's social security number, name, address. Again, you got distribution codes here. You'll have gross distribution amount, maybe have taxable amount, maybe not. Federal income tax withheld, see, it's different. It's a little different from the W-2, but we just need to make sure that we capture whatever information's on here and make sure you input it in the tax layer, okay? But this is an example of what the source document would look like. Obviously, without information in it, it's a blank form, but that's what it's gonna look like for us. So yeah, so this distribution code is actually going to tell us whether, and will tell TaxSlayer whether or not there's any penalty on this distribution, whether they incurred any penalty, namely because they were below that age. And as I said earlier, and I've said repeatedly, if you take money out of a retirement account, typically before 59 and a half, and you don't have a hardship exemption, then you will be taxed. You will incur additional 10% tax. So likewise, when you turn 70 and a half, you have to start taking money out of these accounts. Because see, meanwhile, their earnings are tax-free. The government, that's the trade-off the government made with us. It said, okay, you can invest these accounts, the retirement accounts, and you're not gonna have to recognize that income year to year that you're making. Whether you have it invested in stocks or bonds or whatever you might have it invested in, it'll just accumulate in there. But come 70 and a half, you're going to have to start taking some of that money out and letting it flow through your tax return, because it's taxable income. And they establish how much you have to take out based on what they estimate your remaining age is, and they do some kind of wizardry math behind, and they'll tell you how much your required minimum distribution is. So that could be a reason why somebody is having to report retirement income as well. But to the extent there is not a taxable amount there, then, and this is going to be exercise you have to do, you'll have to do what's called the simplified method to calculate how much of the distribution is taxable. And that will start by identifying taxpayer's age, and in the software it will lead you through all the steps we have to do to calculate that. Just be aware that in scenario 5 you're going to need to do the simplified method, and we'll be here to help you do that as well, and it will walk us through how to do that. But there's also, for instance, a Roth IRA. Is anybody familiar with a Roth IRA? Why is it unique?
Because you're taxed before it goes into the account?
That's right. So when you pull money out of it, you are not taxed. It's tax-free. So, what's that?
Because you've already paid it.
Because you've already paid the tax, and that's right. So in one of your scenarios, you're going to see where there's a 1099-R, but it's for a Roth. So you'll see the gross distribution amount, and then taxable amount in that scenario would be what? Zero. Because I just said, by definition, a Roth IRA, you're not taxed on the money distribution.
If it's over 5 years old, is there
Is there?
You can't take it out before 5 years, right? That's correct.
Okay, there you go. So, and that will come. That should come to us because it should be marked that way. If it were under the 5 years, then it would be marked as such and be taxable. But the fact that I know that it's a Roth should trigger in my head. Unless there's some mitigating circumstance, this guy shouldn't have to pay any. It shouldn't be, any of it shouldn't have to be reported as taxable income, right? It'd be on the gross column, but not flow through on the taxable side. Does that make sense? So that's another scenario that you might see, and you will see actually. Yeah, Form 1099-R, Box 2B, taxable amount, not determined, hence that the simplified method may be needed to figure the taxable portion of the annuity. Okay. Let's see. Yeah, we talked about premature or early withdrawal distributions from the traditional IRA carrying the penalty. So if we go to Pub 4012, H3, we can see the exceptions to turn off that 10%. And you're going to need to know this, not only out in the field, but for one of your exercises. So H3 and 4012. Yeah, so you know, I've continued to say there's a chance you could turn off that 10% penalty if they took money out of their retirement account before 59.5, right? Because if they did, there's 10% penalty. But these are the situations that we would have to input into TaxSlayer, if appropriate, to turn off that 10% penalty tax. Okay, and they include things like qualified retirement plan distributions if you separate from service and or after the year you reach age 55. I'm not going to read them all. I want to make sure you remember this page and you flag it or whatever you need to do just to know that, hey, this person's going to be hit with a 10% penalty because they took money out of the retirement and they were under the age of 59.5. Now I need to go in I need you to think about, well, maybe we can exempt them from that tax. And then so go look at this. The ones that I have seen that are applicable to our clients that I've seen, and certainly applicable to one of your case scenarios, is IRA distributions may qualify for higher education expenses. And we touched on this earlier. What proof do they have to have? Well, I'm going to go with them if they tell me they have. I'm just going to make sure they understand. If you're audited, you need to make sure you have all of this information documented, well documented, okay? There's 7 IRA distributions made to unemployed individuals for health insurance premiums. That could be a very real one. IRA distributions made for purchase of a first home, up to $10,000. Distributions due to an IRS levy on the qualified retirement plan. So you can see there's several. Distributions due to death. Distributions due to total and permanent disability. So how do we know these things? Like I said, the question to them is, what did you use the money for, and see what they say. And 9 times out of 10, it's catch up on bills. You know, hit a hard spot, had to pay car repairs or whatever. Or I didn't know. I got my 401k because I left a job, and I didn't realize, isn't it 90-day window you have to roll over, or I can't remember. 60 day window you have to roll over to an IRA, traditional IRA, to avoid that. And so they spent it, you know. Unfortunately, nobody gave them good counsel. But there's no exception for that, unfortunately. But they would tell us, right? And all I'm saying is that I just want you to remember this. And that way you can go check and see if maybe there's an exception. Yes, ma'am?
What if they've already paid the penalty up front?
Well, people think they paid the penalty, but what happens is that when they make the distribution, typically they'll charge them 10%, but it's not for, so that will be income tax withheld. It would show up in the federal income tax withheld. This is separate, so really they end up paying ostensibly 20% on that early distribution. They may get some of that income tax withheld depending on, you know, what the scenario is, but yeah, they not only hit that 10%, but then the 10% penalty. Question? Okay. Have I beat that one up enough? There's also, so back to the 1040, Paul. Yeah, and Social Security, we touched on that. That can be referred to as old age pension, widow's pension, Social Security, blah, 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 blah. How would I know if somebody receives Social Security benefits? Huh? Yeah, there's a form. SSA, right? And also on the interview sheet, right? The interview sheet, that would have been one of the boxes they checked off. Or last year's return, right? Can you get it? Can you pull up an SSA? You probably have to go to Gov, the fastest way to get it. And it's, and when we come back, we're going to go through self-employment income, because that's it's a little bit of a more of a lesson I need to give you guys. But I know. I also wanted to cover, before we let you go, capital gain or loss. So capital gain, Schedule D is used to report the sale of any investments. And that could include property, a house, stocks, bonds. And we'll see that, in fact, in one of our scenarios where there are actually two separate stock transactions that occur, and we'll need to input those into the tax layer. And again, typically what's going to happen is oftentimes information for interest, dividends, stock sales, stock transactions comes from one entity, one organization. It can come from several, but a lot of times people will just have a relationship with Fidelity maybe, or Vanguard or somebody. And those entities, those organizations will issue a statement to the taxpayer, their tax forms. And it will have cumulatively report all of that information, and we'll just have to peck through and go through line item by line item and pull that information and get that into tax layer. So what I'm saying is you might find on one source document interest, dividends, as well as some stock transactions that we will need to pull into tax layer and find the correct input into that. Easily done, not any big challenge. Did you ever find it? Oh yeah, yay!
Check that
Now
out.
if you can turn it.
Look what I can do.
Yay, there it is, bravo. Yeah, SSA 1099. This is what it looks like. Typically, this box is in pink. That's how I know that. So the reason I wanted you to see it, and at least to have a first shot at it, go ahead and just stay right there, Paul, for a second, is that, again, they could have had income tax withheld, but it's down here in box 6. They're never in the same place. It says voluntary federal income tax withheld. But we would need to put that in, right? Because the tax layer is going to aggregate all the income tax withheld, and we want to make sure that we capture that. The other thing is, sometimes our retirees will come in, they don't have this form, but they have a letter from the Social Security that said, your benefit is going to be $890. And they're like, here it is. And like, I'm sorry, but actually that's for this year. And furthermore, I need the state, the formal document, because I want to make sure that we're doing this correctly and accurately. So, I hate sending them home to have to go do this again and then drive there and all that, but it is what it is, and I just want to make sure that we have that, that correct form. Okay, so anyway, capital gains. The thing to notice about when you sell a stock, I just wanted to touch on briefly here, is that taxes are different depending on if the investment is held short-term or long-term. So you ask, well, what's the difference, short-term or long-term, right? So short-term is a year or less, and long-term is more than a year, right? And tax layer will calculate the different tax rates that are applicable to that. But it's on us to make sure that we input correctly the purchase acquisition date, the sell date, and you'll do all of this in scenario 5 this afternoon while we're creating our first tax return. Your purchase price, whether it's cost basis was reported to the IRS or not, these will all be things that you'll see and that you'll be able to derive directly from the input documents. Then your sell price as well. And then tax layer will figure out what the gain is or the loss and then throw it into the tax return. Okay? But those are the highlights of what comes through. I will tell you that what I've seen when students or volunteers are first working in tax layer, the tendency is when you're inputting information for a stock sale is to put in the amount of gain or loss as an adjustment. But no, that refers to things like if you had to pay a commission or you had any sell expense. Tax layer will calculate the gain or loss based on the sales price and the cost that you put in. You don't have to put in the actual net gain or loss that occurred because of the transaction. So we'll catch you again this afternoon as you get there, but just a heads up on that. The other sources, so if we go back to our 1040, thank you, Paul. Can you go back to the other income? Yeah, so let's go to Schedule 1. Yeah, so we're going to talk about business income right when we get back from lunch. We've talked about capital gain or loss. You can see capital gains or losses go through Schedule D. And then there's unemployment compensation. Again, that's a form they would bring to us and they would tell us they had unemployment compensation. There might be some income tax withheld on that form as well, and we would just follow the prompts and then put that in the tax layer. And then there's the other big bucket under other income. And that could be things like we discussed: jury duty, gambling, winnings, not losses, gambling winnings, and a whole winnings from a lottery, or a whole host of other type of income that might have come through. Okay? So those are, like I say, I'll cover the income business when we get back, and unless there's any questions, I will close for now. Our conversation on income, we've got one more item to cover on that, and then we're going to do, if you go look at your 1040, well actually, your Schedule 1, we're going to finish income, and then we're going to finish the bottom half of Schedule 1, which are the adjustments. And we'll end at a adjusted gross income for today in terms of our conversation on tax law, and then we're going to get you all into practice lab and let you start working on scenario 6, okay? And get some real hands-on experience with that. And then we're going to be here and available till 4 to help you with the practice lab. Okay, that or the earlier of the last person out. So,
No rush, no
yeah,
rush.
no
rush.
No rush. Take your time. 3 o'clock sounds good to me, though. Yeah, just kidding. Amber.
That's why I had to come, because I have to watch Billy.
Yeah. Okay. So, as you will recall, we've talked, I've kind of gone all around in the different income sections. But the big one that's left to talk about is what we call business income or loss that is reported on the Schedule C. And profit and loss from a business, for our purposes, relates to those folks that are self-employed or in business for themselves, or otherwise known as sole proprietors. And those folks must use the cash method of accounting and must be operating the business on a calendar year basis and have no inventory or employees. Otherwise, it's out of scope. So in other words, we are limited into the type of sole proprietor business we can do. We can only do so much.
Inventory?
What's that?
He said inventory? Was
If they have inventory, we don't do it. Yeah. If they have employees, we can't do that. So the IRS really limits us. In fact, we can't do a business that has more than $25,000 in expenses. We can't do a business that wants to show a loss. They certainly can, within reason, within the tax law. If you have 3 years, you can show a loss. Otherwise, it's considered a hobby. You got to go back to your state. So we've got some, parameters around this. And don't worry, we'll flag those and we'll capture those up front. And most of our clients fall within those ranges as well.
Is there any limit on the gross income on the Schedule C?
No, that we don't. Except they always under-report. Yeah. You can count on that, right? Yeah. But so that means what we can do is we talked about earlier, I mentioned some of the most common type of sole proprietors we see are people that have their own lawn service, Uber drivers, housekeepers. What's that? Yeah, trade, people that do their own stuff on the side.
Now, is that, what if they don't have employees, but they pay?
Subs?
Yeah.
Yeah, well, yeah, they have labor costs themselves. Then if they have to issue a 1099 to that person, then we can't do that because we can't generate a 1099 for them to give to somebody else. So, but if it's like part-time help or something, they're paying their son or something like that, we could probably get away with that. I feel confident. The other thing we're going to talk about too is mileage, because that's always a big conversation with our self-employed. Because what the IRS does is they say, okay, you can either take actual expenses for your business vehicle, which would include, gas, repairs, tires, whatever it may be. Or you can go a route of, you identify what your business miles are, and I'll tell you what that definition is, times, I think it's 54 cents this year, or 58 cents? Yeah,
54 something.
it changes each year. And the taxpayer will calculate that for us, but it's on us to help them figure out and identify what their business miles are. And I'm going to talk about that here shortly. So anyway, but those are, I know, we see stylists too, people that work perhaps in a group scenario where they have their booth and they have their chair and they cut hair and do nails or whatever. We'll see some of that. There's quite a few of those. Can you think of any other examples of sole proprietors you've seen?
Just the basic stuff, painters, general contractors, housekeepers, that kind of stuff, gardeners, you see tons of that stuff.
Yeah. Okay. So our 13614C, what line, where would you look to see if somebody had their self-employment income? Where would you look on, where would you expect to see that on your intake sheet? Anybody?
3.
Yeah, part 3, what line?
7.
7. There it is, self-employment income, okay? And as we were saying, as I alluded to earlier, the revenue side of the Schedule C, can you put the Schedule C again, Paul?
Right here.
Back up, okay, back up the page, yeah. This is what the output looks like. We're inputting, but this is just what the output looks, just to give you a sense of this. The Schedule C will include the name of the proprietor, that's our guy, our gal, right? And by the way, you could have 2 Schedule Cs in a tax return, because if the spouse and the taxpayer both are self-employed, they could have their own, and they would fold into the 1040, but it could start as 2 Schedule Cs, right? Or if one taxpayer has multiple different hats they wear, then we would roll them all through one Schedule C, and then in terms of what type of business they have, we would just put various or miscellaneous or something to aggregate them all together. We've seen that as well. But anyway, we'd have the name of the either taxpayer or spouse, top. Then you'd have principal business or profession, including product or service. That's where we would define housekeeping, housekeeper, contract laborer, gardener, whatever it might be. And then business address. So the reason, and this would be the address for our taxpayer. The reason I bring this up is that oftentimes it's easy to get confused, because one of the sources that they'll get to document their income is what's called a 1099 miscellaneous, right? It's not unlike a W-2 or a 1099-R and all that. And it's issued by the person that gave them the money. And the tendency is to go put that person's business name up here, but we're talking about our taxpayer. And often they don't have a business name for their company. It's just them doing their own business, right? So I just bring that up, so don't, avoid that temptation to put the business name for our taxpayer of that of the person that's paying them the money, right? Because they may be working for J&R Auto Sales, and that's not my client's business name. Their business, they just do business under their own name. I'm probably banging that too hard, but anyway, just wanted you to know that. So we will always be cash method, because that's all we can deal with. Everybody, you probably know what accrual is, but we're only cash. So money in, money out in the year is what we will show on the Schedule C. Did you materially participate? That'll be yes or no. Yeah. If you started or acquired this business, check here. This will all come from the input side, but some of the things we'll have to populate. Did you make any payments in 2018 that require you to file Forms 1099? That's meaning that you have somebody else that you hired that you have to give them a 1099 miscellaneous. And for all our guys, it will always be no, because we can't do it, right? I just said that.
Is that determined at intake then?
Yeah, because we wouldn't do it.
Yeah.
We'll catch it at intake and we won't do it. It would be out of scope. So then you have part 1 that would show our gross receipts, and those will come across under, so I was going to say receipts can be documented via a 1099 miscellaneous, or you might have a 1099K, as we'll see in our one of our exercises, or you may just have a handwritten ledger that they come in with. And we have worksheets we have at each of the centers, so if they come to us with all this in their head, first thing we'll do is say, here's a worksheet, go fill in what your revenues were for the year, and here's potential categories of expenses that apply to you. So fill these in as well, because we're not going to sit there and run an adding machine on all their expenses and revenue. What we're going to do is make a determination which are qualified and necessary expenses. We'll help them with the mileage and make sure they've captured all their revenues. But it's on them to do all that, and oftentimes we'll just have them go sit at another table and put all that together. Our experienced clients know more about that. And sometimes we have to send them home because they have more homework to do. Once they realize what potential expenses are and revenues and all that, then they may have to go home, do some homework, and come back, and then we'll complete their return. But we'll coach them, and we'll give them guidance, and we'll explain to them what necessary steps we need them to
When
take.
you get to the question of like did you have any other cash income that's not reported? And if they say, well, yes, you say how much, you have them write it down?
Yeah, I will often have them, if they have nothing else, I will put together something in writing, and I just write it down and have them sign it and date it, and they keep it. I just want them to have a memory of what there was. So yeah, good point. So yeah, these are the formal documents, and like the W-2 or the 1099-R, these have to be input into TaxSlayer, and then we ask TaxSlayer to create a Schedule C, and they flow into Part 1 section, okay? Or we can, if we have they've given us a handwritten ledger without these formal documents, also in TaxSlayer, we'll be able to directly put in the numbers so that they will directly put them into Schedule C, so it'll still come to the same. And then if they have other income, other cash tips or something like that, then there's an other income as well. I'm sorry, where is it? Yeah, other income that you can put in Schedule C. Not to be confused with the 1040 other income, because as we'll learn, this income, this net profit, gets taxed a self-employment tax, separate and apart. And if a number isn't in here that belongs in here, it doesn't get charged the self-employment tax of 15%, as we'll see here shortly, okay? So those are your receipts, and then you have expenses, right? So the software, so if you go down to Part 2, you have two choices. You can either pick from these predefined expense categories, or you can, software allows you to individually put in your own description of expenses if you don't want to put them in, they don't fall into any of these categories. And sometimes it's easier to do that. And then it'll aggregate them, put them here, but it'll also generate a schedule that will have line item by line item what those expenses are. So, for example, let's talk about this. What if you're dealing with a guy that does lawn mowing services? What kind of expenses would you think would be necessary and expenses? Gas for what? Gas for what? The mowers, right? Yeah, fuel. Not only fuel, but repairs, right? Fuel and repairs for equipment. Okay, what else?
Tools.
Tools, equipment, yeah. What else? Huh?
Chemicals, like fertilizers, chemicals.
Chemicals, yeah. Tools, equipment, yeah.
Transportation.
What's that?
Transportation.
Transportation, travel, yeah, we'll get into mileage. Okay, what else? Anything else?
Business cards, flyers.
Yeah, a little marketing or anything like that, right? Business cards, flyers. What's that?
Advertisement.
Advertisement, yeah. I'll say marketing. What's the other one? Everybody has one.
Oh, the phone?
Cell phone, absolutely, right?
Personal use.
Huh? Not personally, that's a good point. Yeah, so the cell phone we're going to have to discuss with them because they all want to take the entire expense. and we really need to get a percentage of that, right? And they're gonna have to guide us on, you know, how much of that these, because clearly they're using it for, typically, people don't have one just for business and one for the other, they have one number, right? So those are, yeah, so a lot of this is common sense too, because that's why I said they don't always necessarily fit into these buckets. I find it easier to go describe them one by one and put them in what's the other expense and then have a schedule kick out. I think I was always told the more detail you can give the IRS, the better, you know, so don't make them guess, and here they are. How beautiful is that, right? So, but so let's say we're talking about a waitress, host, whatever, at a restaurant. What would you think, I'm talking about expenses, let's talk about expenses. What would you think are necessary and ordinary expenses for that waitress or waiter? Huh? Okay, uniform. But what constitutes a uniform? Anybody? What's that? Shoes? Yeah, let's go back to uniforms for a second.
Something you can only use for that.
Like the aprons or something.
Yeah, like an apron maybe for that. Yeah. So if a shirt has a logo on it, you're in, right? But not a peel off a logo. I mean, it has to be a permanent logo. And then they're gonna have to tell us this. But the point is, I'll have clients come in and go, yeah, I had to buy black slacks and white shirts. And I'm like, yeah, but you can wear that anywhere. And they're like, no, I wouldn't. I said, but you could, you know, and it's generic enough that that wouldn't qualify as an ordinary and necessary expense. Shoes, we'll get that conversation too. So people that do concrete, cement, concrete finish, they often have to buy special boots, you know, to be able to walk on the concrete and all that, steel-toed or rubber or whatever. That would be a necessary and ordinary expense. But just Joe Blow has his boots and she has her shoes, gum-soled or whatever for the restaurant, that wouldn't be. Yes, ma'am.
So, I could absolutely be wrong, but in 2018, I thought the law changed where you can't do job expenses anymore.
Well, that's if you're going to itemize.
Okay.
Yeah, unreimbursed job expenses.
Mm-hmm.
Yeah, that's W-2. That's
Okay.
what you're talking about.
Good.
You are correct.
Schedule A.
Yeah, but that impacts somebody that has a W-2.
Okay.
We're talking about somebody who's self-employed, sole-proprietor, and it's a good
Waitresses?
distinction. Huh?
Waitresses are considered self-employed?
They can be.
Okay.
Depends if they get a W-2 or not. Yeah, but we have seen some that are self-employed, and that's just because probably their employer doesn't want to pay the Medicare and Social Security and all that, so they just issue them a 1099 and leave it on them to pay the whole amount. Okay?
If
So,
you're gonna be a model,
a model?
you can put all the expenses for makeup stuff or your dress.
I would think, because, I mean, Liberace won his case. I don't know if y'all know who Liberace was. He was a piano player, and he finally won against the IRS for his elaborate costumes that he was wearing. So I suspect everything within reason, you know, and you'd have to be able to show you only use that for your modeling, though, too, you know, and that you can't use it every day, too. But, yeah, maybe there's a percentage. I mean, there's a lot of gray in this. And so, you know, we have to talk about it and think about it. You know, the exercise you'll do, scenario 7, is a Lyft driver, or he's an Uber driver, whatever, ride sharing. And there's necessary and ordinary expenses, but then there's a list of like 4 other expenses, and you have to decide. Car washes, are those necessary and ordinary or optional?
Optional.
How many say optional? How many say it's necessary and ordinary? Car wash for an Uber driver.
Yeah, it's necessary.
Yeah, you want your car to look good. Right? I'm with you. Yeah. So what about odor odor deodorizer? Yes?
Necessary.
Everybody says necessary? Yeah, I get it. And it's also amount. I mean, I think it was like $15, and I'm like, okay. Now, technically, like that, and then there was bottled water. Necessary, ordinary, or optional? Bottled water for your clients. Optional?
It's going to be a good Uber.
Well, yeah.
Is there a car wash?
How many say yes? Bottled water. How many say no?
Yes for optional?
Huh?
Yes for optional?
No, for necessary. Yeah. Yeah. So, you know, technically what you probably ought to do is look at the number of business miles versus all the miles and take a percentage of them. But I say give it to them, because I take a lot of Uber, and I'm sure liking the fact that there's water in there, and I can see that. Don't you agree as a necessary and ordinary expense?
For food and
not-
water on the Schedule C, it's only 50% if it's.
No, but this was like, that's not for entertainment or dining out. This is just
Oh,
water that's
okay.
sitting in the car for
Maybe
his
under like
client.
supplies and things for
Yeah.
the business.
Yeah.
Now, back to the car wash, your mileage should cover that, because that's part of maintenance for the vehicle. So if you get in the car wash, you can't, I don't think you can claim the car
Oh,
washes.
well, the test lets you.
It does?
Yeah,
Okay.
it includes it.
Because
It's
your
not a-
mileage is the catch-all for everything.
Ah.
Because I have an Uber driver, probably the highest paid guy I've ever seen in my life. He makes 80, 90,000 a year. He's driving 24/7, right?
Oh,
He kept all of his records for new tires, new engine, that's how many miles he does. And then he had the mileage. They were so close, but the mileage always exceeds usually the itemized expenses for it. His wife almost lost her mind because prior to coming to us, he was claiming both of those, double dipping.
Oh.
Billy talked about prior year returns that are screwed up. I said, we didn't do this, you should probably do an amended return to correct that, but they would have owed. So back on all his car washes, weekly and daily, I disallowed them because it's part of the mileage thing. When I researched at that time, 2-3 years ago, for his return.
Wow, okay,
Yeah.
well,
But yeah, just be
there you
careful
go.
with it.
Yeah, no,
Yeah.
I agree.
But the other stuff's, all right, that supplies for the vehicles, you know, that wouldn't be a maintenance for the car.
Yeah.
So those kind of water, I think, would just fall under, you know,
Well,
stuff for customers.
if you're gonna get the correct answer, include car washes in scenario
Oh,
7.
okay.
Yeah, because because I see the finished product, right, and it did include them, so in this case, give it to him.
So pass the test. Right?
Yeah, right.
Maybe that's why I got a 98 instead of a 9.
There you go. Okay, so you get a sense of what we're talking about then in terms of expenses, right? And so the other one I wanted to talk about separate and apart was mileage. So what the IRS says about mileage, because there are 3 categories of mileage. There's business, there's commuting, and there's other. Okay? What's wrong? Oh, no. And so our job is to identify the 3 buckets. Oh, here it is right here. Thank you, Paul. Yeah. Oh, yeah. So part 4 is information on your vehicle. And we will have to put in when the vehicle was in service, the number of miles you drove your vehicle during 2018. That's gross. They'll tell us all this. And it's in test alert, test alert. All this is going to be stuff you'll be working on in scenario 7. And then you have to define for tax layer how much you want to put business, allocate to business, commuting, and then others, the difference between total and those 2, right? It's all math. And then was your vehicle available for personal use during off-duty hours? Did you or spouse have another vehicle available for personal use? And did you have evidence to support your deduction? And if so, was it in writing? And so those are questions that they'll answer for us, and then we will input into Schedule C. Anyway, when it comes...
What about on that, do you have evidence? Do you suggest to them that they
Yeah, we
have
will.
the written document?
Yeah. 9 times, well, often the conversation goes is they don't.
Mhm.
And so we say, well, go put it together and have it as backup. Again, in case you were audited, and they're like, well, what do I need to put together? Well, technically what you're supposed to have is a daily log, and it should say starting mileage, and how many miles I drove to, job A, how many miles I drove to job B, and any given day, and what my ending mileage was. I mean, it really should be detailed. It's the same thing with a cell phone. You should have how many air minutes. If the IRS wants to get nasty with you, they can ask for all kinds of detail. But at the very least, they need to have some backup to justify the mileage, and they have to go through the thought process. And furthermore, we say, okay, for next year, keep your log. Make sure you start anew and keep your log and move forward with that.
I probably missed this earlier, but do
No.
you keep any of their documentation? Nothing?
Nothing.
Zero?
Except what we have,
If you scan
our
it,
e-file.
but
No.
then you give it back to them?
Yeah, and if we do a drop off or we
Yeah.
scan it, we destroy that. That
Okay.
gets destroyed. Yeah, no, we keep nothing. It all goes back to them. So anyway, so what I was saying is how to define these different buckets. And back to my little house here. So this is the house, right? This is where you start work every day. So you go to job A, and what the IRS says, if all you do is 1 job a day, that is not business. That is commuting. Okay? However, if in that same day you go on to do other jobs, in my example, 3, right, jobs, then this is business, back home is commuting. So you've got commuting here and then business miles there. Okay, does that make sense? And then again, the difference between your total miles that you drove the year and those 2 buckets is your other miles.
Yeah, look at it this way, you go home to work every day, do they pay you mileage to go to your W-2? You don't, but if your company sends you somewhere, they pay you for mileage. So that's exactly what Willie's outlining here. So look at, people want to argue with us, well, wait a minute, I'm self-employed. No, look at you, when you work for wages, did you get paid to go to work and come home? No,
Yeah,
you did
you
not.
won't.
Same concept. So you get the in-between stuff all day long.
Yeah, that's a good way to put it.
Now, what if they had a separate office they rented, and they go to that office, and then they go out to jobs?
Then it starts as
Just be
a,
the commute would start at the office.
that's right,
so,
Yeah.
that's right. That's exactly right. Yes, sir.
How would that apply to Uber drivers? Say like I'm at home and I take a ride, would leaving my house be business initially since that is my job site technically? Or
So it's
how
interesting
would that
because in scenario 7, we're going to see Uber and Lyft give us give their drivers information that they need for us to, that includes mileage while they're on the job, driving from one client to the next.
It's on there, they call it the K, right, WK, or,
Yeah.
yeah, it's good, it's on there, which is great.
Yeah,
for
no,
Uber
the 1099K is the revenue side, but there's supplemental schedules
Yeah,
that they
that they
bring
have.
us that would have all of that. But yes, they should be able to not only get mileage from one job, one client to the next, but also in between. They should get mileage for
There's
actual mileage for
And
delivering your client to X spot. But then you should also get mileage from
total mileage.
from where you drop somebody off to pick up the next person. But again, you won't get from home to the first
They'll
person.
still be commuting it.
Yeah, there's a part of that that's commuting. Did I confuse everybody? Okay. Yeah, so Uber and Lyft drivers, we're seeing more and more of those type of individuals coming in for their tax returns. And they don't necessarily know what they need either. And they'll just come with their 1099 miscellaneous or 1099K and not realize that there's a supplemental schedule. They need to dig deeper into their website or wherever, their dashboard, whatever, to find, because Uber drivers pay toll fees, they pay a commission back to Uber, and they pay a ride-sharing service fee, I think it's called. It's like 4 different items that they have to pay that comes out of their money before, that gets deposited into their account. But all that will be in their, in that supplemental schedule that they need to find and give to us.
And I like to put those in that other that Billy talked about, itemized in and out what it is, 'cause it's not a common one that fits in the rest of the C.
Yeah.
So I just spell it out, commission fee, Uber commission fee, tolls, all that kind of stuff.
It'll give you all the names for it, won't it?
It goes back to those line item audits I mentioned earlier, the IRS, they're gonna look at one category, and unless you have it broken down for them, they're not gonna remember nothing. So I usually use that other and just list all the expenses there, so they get that line item. They're gonna tell IRS, cell phone, tolls, et cetera, and they can prove all that by receipts and whatnot, if they get audited.
So like I do contract work and I'm out of town a lot, so typically you can't take meals, but because I'm spending the night, when I spend the night in another city, I'm able to write up my meals as a self-employed individual and my airfare, and all of that. I get to write that off as expenses. So, some of what we're saying, there's always an exception, it seems like, but pretty much what we're dealing with are these more limited situations that we talked about. So if you go back to the Schedule
Do
C.
you get much entertainment, or where they would say, you
Our-
have to explain you can't count your meals during the day?
Yeah.
They don't usually. say
No,
that.
they're either all or nothing. They want to take all their meals. We're like, no, unfortunately,
No,
you
okay.
cannot. Yeah, our Schedule C folks can't take meals. So can you scroll back to the top? Top, yeah. So all your income is now in your Schedule C, showing up on line 7 as gross income. And then all your expenses will flow through and come in line 28. The difference between the two is your tentative profit or loss, right? Now, what happens to that, and how do we get back to the 1040? Well, if we go to the 1040, we'll see that this ultimate net profit or loss, I think, comes down from there. On Schedule 1, I believe it was? Yeah, Schedule 1. Yeah, go to your Schedule 1s. And look on line 20, what was it?
2.
No, line 12. See, business income or loss? That's where the net profit from the Schedule C flows through. Get back to the 1040. You follow me? Okay? And then that gets combined with any of these other types of additional income and then goes to page, the primary page, the 1040 itself. You can go to the 1040 now, Paul? Yeah. And on the back side, oops, whoa, you're fine. It comes through on this line, because this says total income, add lines 1 through 5, in any amount from Schedule 1, line 22. And that's the subtotal of all those additional incomes, right? Any questions? You see how it flows, right? All right, so now we are at adjusted gross income. And this is often an item, a number that is used for various thresholds and when tax credits phase out and phase in, but you'll hear it referred to as AGI. Maybe you've heard that, or there's modified AGI that sometimes comes into play. But it used to be the bottom of page 1 of the 1040 until this year. So what I'm going to talk about now, unless there's any questions about self-employment income.
What do you tell them about losses on the Schedule C?
That, good question. They can take losses, but I can't show a Schedule C that shows a loss. It's out of scope for me.
Right.
So then we say to them, we have some choices here. And typically, I said, we can rework your Schedule C to get it to show a profit, because typically it's the mileage that they have really got a lot of miles in there, and I've done everything I can to narrow it down and get everybody comfortable with it. And I'm like, you have choices here. You can go to pay tax preparer and have them do this tax return with you, show losses and pay the fee and all that. Or we can look at restating your mileage. You may have to give up some mileage, but let's see how many miles we have to take away to get you to show a small profit. And then we can still do your tax return for free. And oftentimes they're perfectly fine with that, because the difference, it far outweighs going down the street and hiring an H&R Block that's going to charge them a couple of $100s to do the tax return. Plus, they want to go ahead and take care of it right now. But to your point, absolutely, you can show losses up to 3 years, and after the 3rd year, then the IRS, if you can't justify it, can make you restate those years prior, because they consider it a hobby, not an income. They give you a ramp up of basically 3 years to get into the black on your operation, but if not, then you have to go back and restate. But anyway, we're not doing losses, but I can help them by changing numbers. Yes, ma'am.
Profit as low as $1?
What's that?
Profit as low as $1?
Yeah. Yeah, even a dollar will do. Yeah. We'll try and do a little more than that, just to show, right? But like I say, 9 times out of 10, it's about the mileage. That's where they'll try and claim they went to the moon and back. And you're like, well, I know you didn't do that, so let's settle on something.
Most of them cut into their self-employment tax, which is their Social Security when they retire. So when they show them big loss, I'm going, you're hurting yourself in the long run by zeroing out your taxable income.
Yeah.
So you
And
want
is
to.
that where you bring this up too? You would say, you really undermining yours.
Yeah, just to understand what the consequence is,
Yeah.
right? Yeah, because again, you're only getting credit for your future Social Security monthly benefit you'll get for those wages on which you pay Social Security. So, like, you don't pay Social Security on interest or dividends or any of that passive income. You only pay it on your W-2 and on, I think it's 92% of the self-employment net profit. So, you want to maximize that. Believe me, as the closer I get to the golden years, and we'll probably only see 75% of that at some point, given what they're suggesting the payout for Social Security will be after the year 38. I think 2034, 38, they're suggesting if there's no more corrections made to that, you'll only see 75% of what you thought you were going to get, because the trust is dwindling down faster with all of us old people taking our cut. Isn't that a nice thing to hear? Okay, any questions on Schedule C? Clear as mud? Okay, so again, the Schedule C is going, as we'll learn here next, we're going to talk about adjustments. So we go back to Schedule 1. Yeah, the bottom half of Schedule 1 is adjustments. I'm just going to take a few minutes here to talk about these so we can start on the exercise. All right, so remember I said we were at adjusted gross income on the 1040, right? And now we have adjustments that could possibly lower that adjusted gross income to get us a lower taxable income upon which the first time a tax will be calculated. What kind of things are adjustments? They include, first, educator expenses. So that is up to $250 for a teacher, teacher's aide, principal, anybody that's working at the school, or $500 if both taxpayer and spouse are educators.
Is that through K-12?
Yes.
Not college?
No.
Yeah.
Yeah. And as I was saying earlier, what teacher doesn't walk into the classroom at the beginning of their year having already spent that kind of money? So how would I know, how would you know if somebody was a teacher or not? W-2, yeah. What else? Huh? Oh, the intake sheet, absolutely. Because on the page 1 of the intake sheet, we ask for occupation, right? So you see it right there. Yeah, so that should click something in your brain. Go, oh, don't let me forget, because they may not know about this, especially our newer teachers. They may not know that they even have this adjustment available to them. So it's on us to say, oh, you're a teacher, and guess what? There's an adjustment. Did you spend at least $250? Oh, yeah, no question. Okay, bang, and we'll input that. Certain business expenses of reservists, performing artists, and fee-based government officials. I have never dealt with that one. 24. So 25, health savings account deduction. So like an IRA, a health savings account is money that we can put aside and then use for qualified medical expenses. Excuse me. It just depends on what kind of cafeteria plan or healthcare plan is available to you. But as a self-employed individual, that is typically, but that's not true. Even W-2 employees nowadays have HSAs available to them. It's a certain kind of health insurance plan that you set up with a bank. They hold your money, you can invest it, you get a debit card, and then when you go to pay co-pays or deductibles, buy your medicines, whatever, you use that debit card and hit that account. But it's all tax-free, like an IRA and all that. And there is no penalty for withdrawing it as long as you're using it for qualified medical expenses, okay? But to the extent you have contributed to that HSA in any given year, and they would have told us that through the input side of things, then that could be an adjustment to the income, could lower the AGI, okay? Likewise, there's moving expenses for members of the armed forces. This has been narrowed down because it used to be moving expenses for anybody that was changing jobs, but they've done away with that this past year. And we don't work with the military. That's out of scope for us, so we don't see that one. The deductible part of self-employment tax. So, remember we talked about our sole proprietors. This is Schedule C, right? So, receipts minus expenses gives us net income, if you would, right? I say net income, it could be loss, but we don't deal in losses. I'm just saying net income. So the taxpayer that has Schedule C net income will be charged self-employment tax. And it is, it's like times 92.5% times 15%. I think I'm rounding, but it's 15.3%. Yeah. And that is the calculation that Taxslayer does to determine what their self-employment tax is. And that will come through, as we'll see later, in, I think it's Schedule 5. It's called self-employment tax. But that's a separate tax that our client will be paying on net profit that they're showing on Schedule C. Okay? And that's why it's so important to make sure we get all the revenues and expenses in the Schedule C and not try to put them on the 1040. Because if they just go on the 1040 without first going through the Schedule C, it'll miss this self-employment tax. So this gives us our self-employment tax. So because
Oh, sorry.
that's all right. So this 15.3%, that represents the Medicare tax and Social Security tax that we pay on every dollar. But if you were an employee and you were paid by a W-2 and you were earning wages, your company would have paid half of that, and you would only be paying, you'd pay the other half. So what the government said is, well, we're going to bill you the self-employment tax full boat, but we're going to give you half of that amount back as an adjustment. And that's how they chose to make it fair for us folks that are self-employed. So that's what this line is referring to. It's all calculated, but that's where it's coming from. It's coming off the self-employment tax that was calculated on Schedule C net income. Okay? Takes half of it, puts it here, and comes to us as a adjustment. So lowering that AGI, getting our taxable income down. Also, again, for self-employed, since they don't have access to a 401k that typically people that are W-2 earners have, you know, W-2 earners, if they're in a really good company, can also get matching for their contributions to retirements. But anyway, self-employment people don't have any of that. So what the IRS or what the tax laws do is allow us to create what's called a SEP IRA, self-employment something or another IRA. I think it's limited to 20% of your net profit from your Schedule C. You can put into the SEP IRA, or you can also, and this phases out depending on what your AGI is, you can also contribute to a traditional IRA. I think it's up to $6,500 with the catch-up if you're over 50 years old. 55? 55. So those two, I have never seen anybody come in that's taken it, but what I have done is I've used that as a tool to help them if we're trying to get their if they're trying to get their AGI down to avoid some other penalty, especially when they have to pay health insurance if they don't have health insurance. So because the threshold, this can impact the threshold of AGI. It can lower AGI basically. But anyway, those are legitimate deductions that apply to self-employed. And actually, IRA deduction can be taken as well by somebody who's a wage earner, depending on how much money they make. They could ostensibly also make a contribution to an IRA and get benefit for that on their tax return as an adjustment. Self-employed health insurance deduction. That's another one where a self-employed person can take their health insurance premiums, not to exceed their net profit, but they can take that as an adjustment as well. So if they're paying premiums of, you know, $300 a month, that's $3,600 for the year, right? But their income, their net income was $3,000, then they could take $3,000 of that $3,600 as an adjustment. Again, I know I'm throwing a lot at you, but just need to introduce it. If we run across those situations, they would have told us, and then we'll help you find out where to make sure we put that. The other one we see is really student loan interest deduction. And everybody understands when you repay a loan, hopefully you're paying not only interest, but you're paying some principal, right, which will lower the balance. But it's the interest portion that if it's the loan's in your name, and you're paying it back, then you can take that interest deduction as an adjustment. And they would have told us that. Where's that on the form? Where would you have found that on the intake, that there was student loan interest? Anybody?
Part 4, line 8.
Yeah. Part 4, line 8, you see that? Student loan interest deduction. And which form should they present to us? Yeah, 1098E. And that would tell us what amount they are eligible to take as an adjustment. Adjustments, just remember that. This is separate from credits, because credits are dollar for dollar offset. All we're doing with adjustments is lowering taxable income, right? So it's not a dollar. These are desirable, they're nice, but they're not as sweet as credits. And in the pecking order, refundable credits are the best. Why are they the best? Because that's money in your pocket, whether you owe tax or not, right? Non-refundable, as we'll learn next time, are only good to the extent you have tax liability. Adjustments, they're not a dollar for dollar offset of anything. They're just lowering your taxable income, so when the tax rate is applied to that, your tax is less. You see that? Yes, no, kind of? Okay. All right, so those are the adjustments. The ones we see most often, educator expenses. What's the max you can take on education expense? Yeah, per taxpayer each, right? Up to 500. Okay, and again, this is all in your 4012. There's a tab called, I think it's adjustments, right? Does anybody see? What section is that in your 4012? What's that? B? Yeah, so all of these are there. We see, of course, the deductible part of self-employment tax, which is a calculated number, but you just need to know where that came from and why it's there, if it is. And if it's not there, and it should be, then we got to go dig around and find out what happened. Question?
So, for example, the person ends up doing $100 of income because of all the things, they'll pay 15.3% of that $100?
Yeah, actually, I think if it's below 400 on self-employment, you don't pay any self-employment tax, right? Yeah.
But it will not go to your retirement plan because you're not paying anything to the income for this.
Yeah, you'd have, if that's all the income you have, you show zero earnings for Social Security purposes. Yeah, and that's why I was saying, that woman yesterday, or one of my classes was saying, her mom and dad were really lamenting the fact that they knew they had underreported their self-employment income throughout the years, and now that they're going for their Social Security, they're like, darn, it's understated. We should have reported more because now the amount we're going to get monthly is so small. And they said, we really did earn that other money, but we didn't. We chose not to report. So, that's, what can we do? But yes, to your question, that's right. Okay? And oftentimes, my preparers will get confused because I go back to that other income, because there's other income here, but that one, there'd be no self-employment tax on this other income if you put it here, right? Versus if you put it in here, they do have to pay self-employment tax on that. It's a small distinction, but I just need you to remember that. Because your 1099 miscellaneous, you actually, can you pull up a 1099 miscellaneous? By the way, I'm glad you brought this up. We pulled a figure from box 7 on the 1099 miscellaneous. And as we'll see here in a minute, there's a couple of different boxes that may have numbers in them. Whoa.
There we go.
Yeah. Let's look at a 1099 miscellaneous.
What examples have you used under other income on the 1040?
Oh, gambling, jury duty,
What if you did like a one-time book review or something, but you don't do that for a living? You just
yeah,
sporadic things?
you can put that, yeah, sporadic things like that. Yeah. So This is what the 1099 miscellaneous looks like, right? And so it'll have all the biographical data. It's this non-employee compensation that's the number we're looking, that when we input it in box 7, this is what flows to Schedule C, receipts. This one, other income, does not. That goes to the 1040. That other income, box 3, that goes to the 1040. And they're different, because remember, if it goes straight to the 1040, it bypasses the self-employment tax and eligibility and all that. But in your exercise, we're told that, I forget the guy's name, doesn't matter, scenario 7, the Uber driver man, he had cash tips in addition to his 1099 miscellaneous and his 1099K, he had cash tips of, I think it was like over $3,000. And we need to make sure we put that in other income on the Schedule C. And don't go direct to the 1040, because you'll miss the, you would have inputted it incorrectly. Are you following the distinction that I'm trying to make? Okay, yes, no?
Yes.
Okay. All right, so anyway, 1099 miscellaneous, it's not, just think, non-employee, they're not employees, right? It's non-employee compensation. This is the number that will go through Schedule C, box 7. That's what we're looking for. Okay? Okay, so we've talked about the limit on student loan interest deduction, by the way, is $2,500. You can put in more than that, and there's a governor in the software. It'll limit it to $2,500. But just so you know, if you see, remember how we said student loan interest is a adjustment? Max is $2,500. So if you input 4,000 and you're going, why is there only 2,500? Now you know, because it's limited.
There's a phase out on that, but y'all wouldn't see it
Yeah, we
because
don't
you're
see
under 58.
Exactly. Exactly. Yeah, and I don't really get into the phase-ins because then it's,
Yeah.
even more. But yes, you are correct. And that comes, like we said, on the Form 1098E, but that's only issued if the taxpayer paid $600 or more in interest or student loans. So they may have to tell us that verbally if they don't have a form for it, but they know they had student loan interest. Again, they would have told us that in the interview, that there's student loan interest. Okay. Yeah, so one more recap. Let's go back to the 1040, and now we're gonna, 2 o'clock, perfect, we're gonna start our exercise. So, what we reviewed so far, Paul, will you scroll up? Okay. Okay, what are the 5 filing statuses? Anybody? 5
Single, head of family, married, filing jointly, separately.
Single, head of household, married, filing, what I hear, jointly?
Jointly, separately.
Widower with what? With dependents. Okay, based on the conversation we had, which filing status do you believe to be the most beneficial? Everybody agree, married, filing jointly? Yes? Anybody think different? Okay, so that's number 1. What's second? Okay, I'm hearing widows and I'm hearing head of household. Who thinks head of household? Who thinks widow? You're correct.
No.
Remember I said they're treated the same as married filing jointly for 2 years, up to 2 years as long as they have that, right?
That's not better, because you have to die.
Somebody has to die, yes. But if there's a life insurance policy, you know, these things happen. Then you get happy again. Okay, what's the next favorable? Head of household, everybody agree? Anybody think different? Okay, and then what? Anybody think differently? Anybody? What's that?
Single is the worst.
So you think single's the worst, okay. Anybody else think single is the worst?
I thought single and married probably separately were the same.
Okay, here's some sames. Well, here, the fact is, single is next to the worst. Married, filing separate is the worst treatment you're gonna get. Because remember, when you do, we'll learn this too. You haven't necessarily heard this, but when you do married, filing separate, you can't take any of the refundable credits, like EIC, you're knocked out. You're knocked out of, then you have to split things as well, and the tax rates are higher as well for married. So, in addition to us not doing it, it really is most disadvantageous for our clients. And so that's why when they walk in and we're talking to them at the front door, you know, and they'll say, I want to do married filing separate, and we're like, well, give me some more information on what's going on or why. And if they're saying, oh, it's because I've always heard that's how you need to do it, then we're like, no, but do you understand? Married filing jointly gives you the best world. You get the largest standard deduction, as we'll see next week. You're eligible for all of the tax credits that are coming your way if they're yours, and their tax rate is actually lower, dollar for dollar, versus the other tax classification, tax statuses, excuse me.
What if they say my spouse is cheating and I want mine to be honest? And you say, well, okay, is that a good reason, but you send them off?
Yeah, and there's well, you know, there's also we can do married filing jointly, and then we can do injured spouse or innocent spouse, in which case that will split the refund based on their withholdings and allocation of credits, and that will preserve the injured spouse with refund if there's one coming to him or her, and the IRS will not be able to touch it to offset a liability owed by the other taxpayer. So there is that, and we've used that often, especially for women, because oftentimes they're the ones that are being, sadly, being taken advantage of, or somebody's trying to take advantage of them. So we help them. That's another service we hope to help folks go through.
So like if there was a married couple and the husband was doing a return and like not getting her, whatever we filed would protect her?
It could.
Okay.
Yeah, it could. Absolutely. Yeah, and it's more about probably the scenarios he owes. Maybe they just got married, but he was a self-employed guy and he owes money to the IRS and continues. And so they want to separate it, you know, after they do the married filing jointly, they want to have the ability to hold her separate from his so they don't also apply her refund to his liability.
Is that all done in the same day?
Yeah, we can do it all right there. Yeah. It's just part of the conversation we would have, and we discover what's actually going on.
So his portion would go wherever that's owed? And
Absolutely, and hers, she'd still get hers.
If
Yeah.
someone makes, I have a husband with his wife, he can file for 2 years either.
Wait, say that again?
I think, my question is, if someone makes his wife or her husband, he can for 2 years file as a widow.
Oh, is a widow with dependents? But they have to have dependents to qualify for this status.
Yes.
Yeah,
For
for 2
example,
years.
Deja,
For 2 years, yes.
If she or he get married, can he or she file?
Well, no, then they go back to being married filing jointly. If they were married.
Or remarried.
It's gonna be.
Remarried.
Yes,
Yeah.
remarried.
It's what you are
It's
at
gonna
Yeah,
be
then
December
it'd be the
31st.
same. Yeah. I mean, there may
If
be more
not, it
dependents,
goes
there
to
may be
single
others.
Or head of house.
Or single. If they don't have dependents, then they'd be single. Yeah. If it's a widower that's beyond the first year of death of their spouse and there's no dependents, then what are they going to be? Single, right? Yeah.
But after 2 years, she gonna be a head of house.
It depends
If
if she
she
still has dependents or not. But she could be. She might be. It just depends on what the facts are at that time. But yeah, if everything else was the same, she still had at least one dependent. Then after 2 years, then the best treatment he or she's gonna get is head of household. Yeah, good question. Any other questions on that? Okay, so then we talked about dependents. What are the 2 types of dependents there are?
Child and relative.
Yeah, and somebody in your, well, more than welcome to look in your book, but tell me about what the tests are for child. Age test, let's talk about age test, somebody.
Under 19.
Yeah, under 19,
And under 24.
if,
In a college.
if full-time student, and third?
And disabled, any age.
That's right, any age, permanently, and permanently and totally disabled. Okay, cool. So, and then what else? What are some of the other tests? Income tests. Really? There is no income test on that side. Child, right? And what about support tests? Yeah, the person that's claiming as a dependent needs to be providing more than half, right? What about residency tests? Over half the year in their house. What about if they're in college? Does that count? They're temporarily someplace? You have to remember it's a temporary residence. They're still considered to live with mom, dad, or whoever's trying to claim them, right? Okay, what page am I looking on to find this stuff? C1, Charlie 1? Okay. What about qualifying relative? What are the tests? What's that?
You have to do less than 41.
50, can't earn more than 4150.
And residency,
What is the residency test?
half the year, right?
A year.
A full year for, right, for a non-relative, right? Or is it for everybody? Let's go look. What is it, guys?
Can't be your child.
Right.
Even for
Half of.
Yeah, the person either must be related to you in one of the ways listed as a relative, who don't have to live with you, or must live with you all year as a member of your household if they're not a relative. So you can have a non-blood be other qualifying relative, but they would have had to live with you all year long, right? But they can't have made more than $41.50, just like you said. That's right. And you have to provide more than half of the support, right? Yes, ma'am.
Just to clarify for the child, because you gave a scenario, once he turned 25, she was no longer applicable. Is it under 24 or 24 and under?
Let's read it together. What does it say? What does Charlie 1 say? Under age 24.
So they would have to be 23 at the end of the year.
That's it. Very good point. But it is, all these age tests are different depending on what you're looking at. But this is the big one. This is the big one that drives a lot of stuff, so I'll make sure we know that. Okay, that's cool. And then,
And did I hear you, you told me earlier that the child must have lived with you for more than half of the year for the qualifying child. That wasn't true in the past. They could be a dependent, right? Previously?
oh, if they like lived
In
in,
Mexico or Canada or somewhere else?
that is correct. For the, was it?
I-10.
For the I-10s, yeah.
For the IT.
Mhm. Yeah.
All of these should be work for someone if we want, if I'm gonna be qualified relatives. For example, if I have a brother, he lives with me for more than half of the year, but he has some income more than 4150, I can't claim.
That's right, because he didn't make the, he exceeded the threshold. The question was, could she take her brother as a qualifying relative, because he exceeds, he can't be a qualifying child, but he makes more than the 4,150.
So all of those. Sure.
Yeah, it's all or nothing, absolutely, yes. To your point, it's all the tests have to be met. It's not or, it's and, right? All the tests have to be met for you to take that person as a dependent, either type. And then we talked about incomes, right? So wages, salaries, how are those documented? W-2s, right? We talked about that, blue in the face. What are some other kinds of income we talked about? Interest. What else?
Distributions.
1099.
Yeah. Distributions from retirement, 1099Rs, right? What else?
Social Security.
Social Security. Is Social Security taxable? Depends. May or may not be. Taxpayer will do the work. What about distributions from IRAs and pensions? Are they taxable? Yes, no? Some say no. So what kind of IRA would not be taxable? A Roth. But all others may or may not. And we're gonna have to see what the form tells us, or if we have to do the simplified worksheet, right? What other kinds of income we talked about?
Interest.
Alimony, yeah, interest, yeah. And what's that?
Rental.
Yeah, but we don't do
We
rental.
don't.
Yeah, we don't do rental. Remember, I spent all this time. Self-employment, right? Oh, God. You gotta take that home with you. I'm so bummed. Self-employment, what schedule is that on?
C.
Schedule C. Who reports that kind of income? Sole proprietors, yeah. Our hairdresser, hair burners, our carpenters.
There's like a helpful sheet on D1 if anyone needs it.
D1?
Yeah.
Okay. And that has a list of,
Taxable and non-taxable income.
oh yeah, the taxable and non-taxable income that we went through that. Yeah, all D1, remember, it has a exhaustive list of what's taxable versus what's not. Yeah, okay. Yes, sir.
I have a question, the non-taxable income.
Uh-huh.
I know like gifts and inheritance, once they hit a certain threshold, they can become taxable. It's
Yeah.
over a certain amount.
Yeah, and I don't know what the thresholds are.
To the donor,
No, to the donor, not
not
to
to
the,
the
not the
Not to the
recipient.
recipient.
Okay.
So bequeath me.
So what was confusing on the chart that we're looking at, if you look up above, they have taxable, and up there they have trust and estate, but that's coming through to you on a form,
A
and that's
K1.
based on the, based on the income of that. But then when you're down the bottom, it says trust and estate, and then those are like the distributions that come to you that are not.
That's right, the
taxable.
cash distribution that come out of your own. Yeah,
Well, or out of the
or so- or
decedent's
sort of
estate,
deceit-
and
yeah.
not.
Okay, that's a good point.
So it's confusing on the chart.
Gotcha. Okay, thanks for the clarification. Yeah. Okay. All right, so then those are the major incomes we talked about. We'll see. And then we talked about what are the 3 types of mileage in their Schedule C? Business?
Commuter, others.
And others. Yeah. And which is the one that will turn into an expense item on our Schedule C? Which of the 3? The what?
Business and
Not the commuting, just the business. It's only the business allocation of miles that gets to carry forward as a business or mileage expense. Okay? All right, and then we talked about adjustments, and you all know those, right? We'll go over these first thing when we come back together next Saturday, a little refresher. All right, so now what we want to do is work in TaxSlayer. So fire up your computers. Yeah.